Good morning, everybody. Welcome back to another episode of The Market Open. We are live. It is Thursday, July 9th. Thank you, everybody, for being here once again. We have had a variety of headlines over the past 24 hours that have kind of flipped the narrative again. I think, 2026 can be characterized as narratives that flip every other week and present opportunities, present challenges. We've obviously had a lot of volatility, particularly in the semiconductor space, as those stocks have been down about 20 to 25% over the past 2 weeks. But you're starting to see a bit of a rebound in the pre-market. There's a reason for that rebound. That rebound has to do with geopolitical tensions, which have only gotten more aggressive over the past 24 hours, although they've kind of been calmed down, even though launching strikes back and forth maybe is not that much of calming down. And you've got a big headline this morning out from Meta, which is going to be very ironic when people listen to what the headline is, because, if it's good for Meta, then the stock obviously has to go down, because whatever is good for the hyperscalers means that their stocks have to get hit. But it's even better for the semis. Meta right there down 3.35%. This thing was 625 2 days ago. Now it is at 582. The semis are up. Nvidia, 205. That's green. Micron, back above 1,000. That is green. Dell is up 2%. Oklo is up 1.25. HPE is up 2%. AMD up 4%. This was below 500 yesterday. Broadcom up 3.75%. They had a deal with Apple yesterday. They got a deal with Meta today. We will talk about that. TSM, your photonics plays. Essentially, the sort of narrative that we talked about on Tuesday, which is that whenever the semis dip, the V-shape happens basically within 2 days, is kind of coming to fruition. Not all the semis have recovered. Nebius is still well below that 290 level, although Nebius almost back into the 230s, which is very nice given this thing was at 186 yesterday in the pre-market. It's not fully recovering to make the entire V-shape that it's done over the past few months, but it definitely looks like it's starting to do that. And if we do get a full-on V-shape, it will just be another moment over the past 2 months where some headline came out. In this case, it was the Meta Compute stuff and the Iran escalation over the past couple of weeks that caused the semis to dip. And then a couple days later, literally a couple days later, the market remembers, oh yeah, we're compute constrained and we need to buy the semis. And so as a result of that, you're starting to see the pre-markets flip a bit green. And we're going to talk about some of the other headlines that we've got going on affecting the broader equity markets. SMCI, that's up 2.49%. Arista hit an all-time high yesterday, back up to 188. That's up 3.85%. DigitalOcean, that's up 1.6. Even got SpaceX getting a little bit of love right there, back above 150, up 1.93%. Lumentum, ASTS, CoreWeave. This thing was almost below, or I think it was below 80 a couple days ago, 78. Now it's back at 92. IREN, that's up 4%. Intel, which was almost going below 100, that's at 115. So just a lot of these names getting a decent rebound. Now, I don't know if this pre-market pump is going to last, because when the market opens, we're going to see what else gets priced in. But at least for now, it seems like some of the headlines are bullish enough to get the market to change. So what's down in the pre-market? Software, obviously, because if the semis go up. IGV down 2%. The software names, your Shopify's, your Palantirs, your Reddits, they all got to go down. And the hyperscalers are down, because if the semis are up, the companies that they're getting the money from, like Google, Microsoft, Amazon, and Meta, which are all down in the pre-market. Meta getting hit right there at 582. Wow, Microsoft, I didn't even see it losing 380. There you go, back to 376 as this was pushing 400 a couple days ago. Water is wet, right? The semis, when they go up, the hyperscalers and software names have to go down. So that's what we got in the pre-market. We'll talk about kind of why that's happening, and then we will keep going from there. Triple V, thank you for the $200 super chat. Appreciate you being here, Mr. Triple V. A lot of you guys have been asking, where is Triple V? Well, there he is. Thank you, Triple V, for the super chat. Thank you for being here. Thank you for supporting the stream. And a good morning to everyone who is here in the chat. I'm Beneficial. What's up? Anita, what's up? Scott, Mark, Robert, Musel, what's up? What's up? Otis, Gene. Shout out to Gene, man. Gene sent me a picture last night of him buying his mom a house. Gene has been watching the channel for a very long time, and he was at the Miami meetup. That's why we do it, right? I think if you had to put your top 3 reasons of why you invest in the stock market, one of those reasons for probably 99% of us is to support our family. So it was very emotional seeing that picture yesterday, and you could tell it was pure joy in that photo of him hugging his mom. And the stock market contributed, taking a risk with your financial capital, but also taking the intellectual risk to even care about finance over, all the other opportunities or all the other activities people could care about. That is what led to being able to buy that house. So congrats, man. Really, really proud of you. And it's awesome. It's one of those things where you're able, I think he's like 28, 29 years old. So to be able to do that at a young age is really, really cool. Rachel, what's up? Zecker, Krupa, good morning. Jonathan, Whippy, Juan, Cycle Time, what's up? Martin, Froyo, Daryl, Custer, Chips. Misconception, water isn't wet, it makes things wet. That's probably a fair point. By the way, do we have any World Cup games today? I think we do, right? Because yesterday we didn't have any. Morocco and France. Okay. Morocco and France. All right. What time is this happening? Is this during the 4 p.m.? All right, so it's during the market close. All right, so we'll keep an eye on that one. We are getting pretty close to these finals, and it's going to be very fun. Now I'm invested in the World Cup, dude. Now I've watched 2 games. Now I've seen this whole Argentina. Argentina is being investigated by FIFA for some controversy on the penalty call. Like, it's absolutely great. Not by FIFA, by the FBI. It's a real headline. I couldn't believe it. But now I'm invested. Now I care about the World Cup. So excited to keep up with it. Chad, what's up? Good morning. I put out the AIPCon interview last night. Chad's interview is in there as well. I'll be posting the full clip on Twitter today as well later today. I shared a little bit of the Dublin joke with Chad on the market close yesterday. So you guys got to see that, but you can check out the AIPCon interviews from AIPCon 10, see the pod with Chad and all the other different customers that we were able to talk to as well. Gene, thank you for the super chat. This chat changed my life. Thank you, everyone. Appreciate you, man. Again, congrats on the house. Absolutely incredible. And that's why we do it. That's why we're here every single day. And that's why we analyze the scrutiny of these equity markets that take us up and down every single day. But we're all addicted to it. And, we all care at the end of the day of making a difference in our life. So having said that, speaking of volatility up and down, let's get into the first reason why I think we're up in the pre-market. Remember when Trump said he's getting rid of the ceasefire yesterday? Well, he called last night and said, actually, Iran might want to make a deal.
We have many ways we can win, but we've already won militarily. They have very little left, and they want to make a deal so badly. They called a little while ago. They want to make a deal so badly. I just don't know if they're worthy of making a deal. I don't know that they're going to honor the deal. That's the problem.
If they want to make a deal, why do you think they attacked commercial vessels?
Because they're sort of crazy, to be honest with you. They're sort of crazy. They're a little bit out of control, but they want to make a deal.
As soon as he said that, futures flipped green. As soon as he said that, futures flipped green. So this is really interesting. Trump in the morning yesterday, 5:30 a.m., the reason the market tanked and then somewhat recovered throughout the end of the day, and we'll talk about why it had to do with the FOMC minutes, said, I think the ceasefire is over. I don't want to negotiate anymore because I don't think you can trust them. And, the MOU is over and we're going to go back to attacking them. That caused the market to tank. Then yesterday at 6 p.m., they actually did attack. Trump posted a photo, the caption here, and I'm not sure if this was a real photo of exactly what happened. A lot of people saying it's AI, but there are videos that actually show different attacks on IRGC bases. So regardless of if it's a real photo or not, the attacks did happen by U.S. CENTCOM yesterday. And Trump said, this is in retribution for yesterday's bombing of ships by Iran. If it happens again, it will get much worse. So he posts that around 6 p.m. At around 8 p.m. on Air Force One, he says that quote that I just showed you in the clip that caused futures to go green, which is Iran called a little while ago. They want to make a deal. And so now the market's in a little bit of a weird spot because it's like, okay, we just saw them attack each other. Stocks should be going down, right? Oil should be going up if they're attacking each other, unless it's a one-time attack, which is kind of how I think the market's pricing it in. Oil up a little bit right here in the pre-market, 73.99. But Trump also said right after the attack, Iran wants to make a deal, which is kind of negating the attack. It's like maybe the attack was just like a tit for tat attack that you have to do. It wasn't in civilian areas. It wasn't in their water bases or their water plants. It was in a military base, which theoretically, wouldn't create a crazy amount of collateral damage that would cause a massive retaliation. Iran will probably retaliate in some way by hurting an ally in the Middle East and potentially a refinery or something that's going to affect oil prices there. And maybe that happens, but the market's kind of saying, all right, like the U.S. has got to do their thing, Iran's got to do their thing, and then after that, they can go back to making a deal. It's kind of that process that happened back in June of 2025, where they had to symbolically attack each other to prove that they were serious about standing their ground, and then they get back to negotiating. Now, maybe Trump said Iran wants to make a deal for the hell of saying it, and it's just the form of negotiating, and they don't actually want to make a deal, and we're like legit going to get back into war. But the stock market, especially the most high beta names, are not pricing that in at all. The stock market is ready to say, no, we are ready to go higher. CapEx is all that matters. And we don't care about this Iran stuff anymore. Now, Axios this morning said that the White House is bracing for a multi-day or multi-week exchange of fire with Iran over the Strait of Hormuz. A U.S. official said the standoff could last a day or two or a week to a month, depending on whether Iran keeps attacking commercial ships in the Strait. He also said, quote, we're going to slap them a bit so they understand we're not effing around. Iran retaliated by striking U.S. bases in Kuwait and Bahrain while insisting it would not give up its claim to control the Strait. So once again, I am a bit confused on how, and I think the market's a bit confused on how we need to price this in, because what's happening in the pre-market right now, semis are up, software and hyperscalers are down. Kind of typical price action we've seen over the past couple of weeks. We're not seeing everything down because of a geopolitical conflict like we saw back in April and March. And we're not seeing everything up based on the idea of a ceasefire like we saw a couple of weeks ago, which, kind of pumped up the entire market. It's kind of back to that yin and yang, like this goes up, this goes down, this goes down, this goes up type of market. And I guess that's just what we're all used to. So really, whatever is happening in Iran right now isn't actually affecting the market yet. We'll see what happens throughout the day. But the headlines from the pre-market don't seem to be the most bearish. So why are the semi names actually getting a bit of a pump? Well, it goes into Meta. And this will answer the question for why some people are asking why Meta is down. Put in the chat if you bought the dip yesterday on Trump. I said on the market close, I bought 4 names yesterday: Rocket Lab, Shopify, Palantir, and what was the other one? Meta. Meta was at 604. Shopify was at 117.24. Rocket Lab was 82 on the dot. And then Palantir was 128.98. All of those were up a lot after hours. All of those are now down except Rocket Lab in the pre-market because the semiconductor names decided to go up. We bought CoreWeave a couple days ago, so CoreWeave's doing well, but it's one of those things where it's like if you buy anything other than the semis on a day where you get a big piece of news where the semis have to go up, the things you bought have to go down. And if you buy the semis while they're, super up, if there's any headline that questions the AI trade, the semis are going to go down. So it's one of those things where you kind of have to pick your spots and then just live with the results. But this headline this morning is why the semis are going higher. So Meta plans to double its AI computing capacity to 14 gigawatts in 2027 and begin manufacturing its in-house Iris AI chip in September, according to Reuters. That right there was enough to get the market to be like, oh yeah, Meta's not really in excess of compute. They're going to be spending more on compute. And if a hyperscaler to the size of Meta is going to be spending more on compute, the semis got to go up. The Iris chip, part of Meta's MTIA program, is designed with Broadcom. That's why Broadcom's up in the pre-market, and manufactured by TSM. That's why TSM is up in the pre-market, with the goal of reducing reliance on NVIDIA and AMD GPUs. That doesn't mean Meta's going to stop buying from AMD and NVIDIA. By the way, when an AMD gets to 600, Meta gets a $100 billion stake in the company. So that actually is something that's super bullish for Meta if AMD can get to that $1 trillion market cap. But essentially just means they want to build their own custom silicon. This is the, I think, 5th company we've talked about in the past month that wants to build their own custom silicon. Obviously, Google and Amazon have been doing it. Microsoft had some rumors of selling chips to Anthropic. That's what the stock shot to 470 a few weeks ago, but those rumors kind of faded out. And then Anthropic is building their own custom silicon. OpenAI working with Broadcom, and Cerebras is building their own custom chip. So if Meta is getting into the race, that just means you're going to need a lot more demand for optics, for memory, obviously. Companies like Marvell, the wafers, the server racks, Dell, HPE, that entire semi-stack benefits when a hyperscaler wants to start creating their own chips and spending more on compute. And that's why the semi names are up right now. Meta has secured long-term supply agreements with Samsung for memory, SanDisk for flash storage. That's why SanDisk is up in the pre-market. And then Sumitomo Electric for fiber optic equipment. Once again, the market is remembering how much big tech is willing to spend on CapEx. So, for the people that are just sitting back and laughing at this, sometimes you got to just laugh because you think the hyperscalers are finally catching a break, and then this is theoretically bullish for Meta, right? They're spending more on compute, they're expanding their capacity, they're building more data centers, all this stuff, but it's not bullish for Meta. And if it's not bullish for Meta, it's not bullish for any of the hyperscalers because they kind of move with each other because it is cash flow that is leaving the hyperscalers and it is going into the semis, which is why, Meta having a reversal for the past 5 days has now reversed the reversal simply because of news that once again is good for one part of the market, but theoretically in the short term, not good for the other part of the market. Wow, Salesforce, that's down 5%. as that's getting hit. Grok 4.5 did come out yesterday as well. I have not checked the stats on Grok 4.5 or done any of the benchmark or seen any of the benchmark tests as an LLM, but that's also really good for the semis because you've got a new foundation model entering the race, and that foundation model to be trained and constructed needed a lot of compute. So the market's once again remembering, oh yeah, these models are going to be coming out. Meta, by the way, also released Meta Image Muse Spark yesterday. So they have even more of an incentive to spend on all this inference and compute that they're building out, which kind of reduces the excess capacity narrative that was happening last week that hurt the neoclouds. But even that new foundation model, which is ranking number 2 behind Nano Banana, which in the first day of being released is pretty incredible, isn't enough to re-rate the stock because, again, to build that model, to train that model, they're spending on compute. And, the market doesn't like that. But obviously all the software names, which once again, these token costs go down. It's the most bullish outside of the hyperscalers for the software names. And token costs are going down 90% every year at this point. But still, the software names, can't really catch the bid when all that cash flow is going to the semis. As you can see right there, all the semis are up in the pre-market. Intel, ON, ASML, Broadcom, Qualcomm, SMCI, AMD, and NVIDIA. All the software names are down except Oracle, which is technically still a data center play. So it's getting some of the semi love right there. But Cloudflare, CrowdStrike, ServiceNow, Adobe, MongoDB, Team, Atlassian, Palantir, Datadog, Snowflake, all of those are down. This is a chart by Bank of America that kind of highlights the irony of what's happening right now. This is the 12-month forward expectations of free cash flow for hyperscalers and semis. As you can see, the blue line, the light blue line going down are hyperscalers, and the dark blue line going up or semiconductor companies. Corning, that's up 7% as well. Lam Research is up. Texas Instruments. They all move in a pack. And the pack is deciding to go up right now, partly based on this chart and Meta's announcement this morning, which is not even a Meta announcement. It's a Reuters report. But because it's so detailed, it seems like it's pretty accurate, making the case for, once again, all that cash going back to the semis. Applied Materials, that's up. I mean, basically, if you bought any dip on the semis over the past couple of days, you've benefited. I did buy the Nebius dip. I posted this when I was in Singapore. 100 shares at 232. Obviously, a little early, given this thing tanked another $40 after that happened. But I mean, the fact that Nebius has a chance, this is the post right there on X, the fact that this is a chance to potentially get back above 232 after falling to 185. Now, I'm not going to hold my breath because, Nebius goes back down to the 200s. I would understand it's tough for it to make that big of a rebound. But I bought this the day that Meta announced the excess compute stuff. Nebius fell from like 280 to 230. I thought that was a reasonable dip. I was like, look, at the end of the day, I feel like this is not bearish for the neoclouds. I think Corey at the time was trading at 95. But it ended up going down to 180. And so if that neocloud narrative is re-rating, then it seems like the Nebiuses of the world, the Irens of the world, the Corys of the world should be back. And I expect Corey and Nebius and Iren and Cypher and all them to take another dip when you get another fear of this compute constraint narrative collapsing. But as of now, if you're trading it, it goes back and forth on how the narrative is, how the sentiment is constructed around that narrative, and then ultimately how the market wants to navigate where they think the capital should be outgoing. A couple people say I did the same. Yeah, there was a decent amount of people that bought that Nebius dip the day the Meta compute news came out. Because, I mean, Nebius has been really hard to give you a dip, because it just rebounds so quickly. I mean, even now, it's at 228 pre-market. It was at 185 pre-market yesterday. This stock, I think, has a date with 300. It wants to go higher. It has so many narratives from the holistic perspective of it, not just being a neocloud, but being a full-scale software solution for tokens and inference that, the market is starting to really appreciate that. So when you get those opportunities, and I thought, 280 to 230 on that Meta compute news was an opportunity, but it ended up being an even better opportunity over the past couple of days if you bought the dip. So the semis will give you a chance. And every time it feels like the skies is falling on the compute data center narrative trade, you'll have some type of headline that comes out that once again reinforces, no, money is flowing into the system and it's not stopping anytime soon. Eventually it will stop. S&P 500 flipping green right here in the pre-market, but maybe it's going to take a while for that to happen. Qualcomm is 193. That's up 3.5%. Qualcomm, I don't think has any news, but again, they had that massive bullish investor day last week and the stock fell from 230 to 178. So, I mean, if you like Qualcomm, I think even, at 192, you're still getting a decent dip, but I think obviously it's pumping with the rest of the semis as well. Oracle, I think, is a buy here. I think is a buy. I have not bought it. I think I'm going to buy Oracle today. Maybe we'll buy it as soon as the market opens. But I bought Oracle at $137.50 on April 13th, on the worst day for software, which now it feels like we've had even worse days than that for software. It went up to 250. The fact that it is round trip back to this level, I think you're getting a hell of a discount here. The thing the market is concerned about is dilution, but it's like, okay, all these companies are diluting. I don't think that's a concern. If you look at their operating income going into the next 2 years, the stock is cheap. It trades at 6 times sales. It has the largest RPO. Now, if OpenAI sentiment fades away, that could be bad for Oracle because 50% of their RPO is OpenAI. But if you're going to give Nebius and CoreWeave a premium valuation, I mean, yeah, I know Oracle has debt and I know they're levered up, but they have a legacy software business that's growing, even if it's not growing like crazy, and they have a data center business that's exploding, and the stock is now flat for the year. So I do think Oracle is 100% at a discounted rate right here, especially because you're getting it at those April 13th prices. And even if it goes to 120, it's like, all right, cool. You're going to have a better opportunity. But the fact, like the idea that they would take this thing to 100 would be like taking Nebius back to 120, 130 and taking CoreWeave down to 50. I don't know if it's going to be that easy for that to happen with those companies, as long as the compute constraint narrative continues to persist. If that narrative completely fades out, all these names are going down. If it doesn't, the names that haven't appreciated in any level of a V-shape, which Oracle hasn't had any meaningful V-shape since the decline over the past 2 weeks, they might present an opportunity. AMD right there, that's up 3.84% as well, as that continues to go green. A couple of people saying they bought Oracle yesterday as well. Nebius right there up at 228 in the pre-market. Broadcom, I know a lot of us bought Broadcom on that earnings dip. We are now starting to get a bit of a reward here. I think this gave you 368 on the lows. It's at 403. It was at 490. The reason they fell was because they didn't increase guidance. I mean, they fell like rapidly because they just didn't increase their guidance. Imagine if NVIDIA doesn't increase their guidance. Obviously, the market would not be happy about that given the scale that they're at. But outside of that, the earnings were incredible. And not increasing your guidance, I don't know if there's a reason for the stock to get hit. But they did announce deals with Apple yesterday, deal with Meta today. And that's why Broadcom is getting some love. Google is down because Meta is down. If Meta is going to be spending all this on CapEx, so will Google. And again, it's irrational. Like at this, it's not irrational. It makes sense why the hyperscalers are down. It's just when you look at the quality of those companies going out into the next 4 or 5 years, what their operating income and cash flows will be, even if in the next 2 years it's not going to be as impressive because they're spending on all this CapEx. I think these prices, when we look back at 2030, is going to be an absolute gift. And I don't know if you can say that for the semis, because I don't know if some of them can put up the type of earnings growth they're putting up when that CapEx starts to slow down. But in the short term, the semis are a way better trade. In the long term, I think the Googles, the Metas, the Amazons of the world, are going to reward people. Case in point on semis, SOXX, the semiconductor index, took in $5.4 billion yesterday, which is 4x the old record for a daily flow. So people bought the dip. Almost definitely, or a big institutional level of flows probably came into this. Meanwhile, the 3x SOXX, so triple leverage semis, took in $1.2 billion, so $7.1 billion into the long side of semi ETFs yesterday. The semi ETFs have been down 16% in the past 2 weeks. Many of the names inside of the SOXX have been down more, substantially more than 16%. So it seems like institutions were waiting for a dip. Maybe this was all retail, but if it wasn't, then here's the dip. And it looks like people are taking advantage and trying to get exposure from that dip. So that is what we got. That is why the semis are up and the software names are down. I wonder when the market opens if we are just going to see Meta, Google, Palantir, Datadog, Adobe all collapse again and the semis go higher, which means if you have semis and software in your portfolio, it'll obviously be lopsided based on some of the price action today. But if it is, it'll be just another version of what we've been seeing for the past couple months. Bloom Energy had a short report come on it yesterday. We talked about the short report on the market close. I don't think the short report is good. Bloom came out today and they put out some details saying that we reject all the claims in the short report. The fundamental argument here is that the company was lying about China being part of their supply chain. And because Bloom has such an important role in building data centers with their fuel cell technology, which is kind of the most unique alternative forms of technology outside of the traditional forms of energy, nuclear just really hasn't taken off yet, to build data centers and power them, the short report is alleging that China could cut them off at any moment because they're a pivotal part of their supply chain, and that could hurt Bloom. I think that thesis is just weak. I think China is a pivotal part of a lot of people's supply chains, and the evidence they have for why China is like the main tail risk for Bloom was like a WeChat conversation that they had with some anonymous supplier in China. I don't know. I don't know if that's enough to stop Bloom's momentum right here, but it was down 9% yesterday, recovered. It was only down 5%, and now today it's recovering completely. Down only, or up actually, 6.97% in the pre-market. So that is what we got with some of these larger movers in terms of volatility right here as the market continues to give the semis a bit more of the love. On Spain yesterday, this is another reason I think the market went up. So the Wall Street Journal reported that Trump is looking at seriously getting some goods to embargo from Spain because of Spain's lack of support for the Iran war. Even on that premise, Trump walked back some of his comments and said, actually, Spain's been kind of nice to us.
Before the NATO summit, you spoke.
Who are you with?
Reuters. You had
not the best.
You had issues with. You said you had issues with leaders of Spain, UK.
Yeah.
Very
Spain, I will say, I did have issues with
also
Spain,
Germany,
and I still do. But Spain, they came back all the way today. Spain was very generous today. You know, I told them I'm going to stop trading.
What did Spain do to them?
They made. They honored the request for lots of payment, and if they didn't, we wouldn't even talk to them. They were very bad. They behaved very badly, in my opinion.
I mean, this was one of the biggest stories yesterday, that Trump is going to get rid of $47 billion of trade with Spain. And then what happens? Not even 7 hours later, Trump is like, actually, you know, we talked to some of the Spain officials and they were really nice. They honored some of the agreements we had. They are getting ready to pay us for some of their past dues. I have no idea what he's even talking about here, but whatever excuse he made up to justify why the relations with Spain are actually okay is it's just incredible. It's like, yeah, Iran wants a deal. You know, the ceasefire might actually be in play. Spain, yeah, they're fine. We're going to keep doing business with Spain. Like, at this point, every time he says something egregious and the market dips, it's the market being stupid to actually dip on believing the egregious thing he's saying. And people who buy that dip get rewarded, which, you know, yesterday was another opportunity for that. So I also think Trump just likes it, dude. I think he likes saying shit that makes the media go crazy and then coming back and being like, I didn't actually mean that, or having some excuse to kind of justify why he said what he said. And I don't know. I think because he enjoys it so much, that's why he keeps doing it, and the market somehow keeps reacting to it in this capacity. It's his art of the deal. Yeah, if that's what we want to call it, and it's his art of the deal. And it definitely makes you think every time again for the next couple of years when Trump, like next April, Trump's probably going to do something and make 3 Aprils in a row that crash the market. And I mean, it probably will be a dip buy. NVIDIA's valuation is the cheapest since early 2019. This was another reason I think NVIDIA pumped yesterday. So this chart went viral from Bloomberg. So a lot of people start to recognize, wait a second, like we knew NVIDIA was cheap, but it's cheaper than where it was from 5 years ago, where, you know, we didn't have this AI tech revolution. On top of that, you had the China news come out yesterday that China's Tencent, Baba, and Baidu and JD will be in the running to buy H200 NVIDIA chips as long as the Commerce Department of the United States gives them the green light to remove those export controls. Then NVIDIA will start to get some of that juicy China revenue that they've been waiting for a long time. So that is a catalyst. I don't think they need the China revenue for the stock to be closer to 250, but having that China revenue is not a bad thing. SK Hynix will be getting priced today. It's not getting listed today. I believe it's getting listed tomorrow. It is apparently 7x oversubscribed. SK Hynix was up 5.3% yesterday, which is part of the reason why Micron's going up. Kospi was up 3%, then it went down 3%, ended up only up 0.5%. So at least he didn't have too much blood in the South Korean market. But once again, 2 companies control the state of where South Korea is going to go. And as long as those companies hold up, then they will continue to hold up the entire index. Bank of America also put out a note yesterday. They estimate NVIDIA annual shipments by up to 99 gigawatts of data center capacity by 2030. Now, remember, Jensen's argument is 1 gigawatt will eventually cost $100 billion to be able to build. If NVIDIA can ship up to 99 gigawatts of that data center capacity by 2030, that is why Bank of America came out and they think that NVIDIA can do about $1 trillion of revenue in the next 3 years. And if that happens, you know, obviously the stock trading at 5 trillion market cap is, you know, likely going to be re-rated. On top of that, Goldman Sachs put out this note yesterday as well. Goldman's latest forecast puts hyperscaler capex at $740 billion for 2026 and $996 billion for 2027. You have SemiAnalysis saying it's going to be well above even these levels. I mean, either everyone is sipping the Kool-Aid and everyone is wrong about this idea of CapEx increasing, or this is one of those moments where you have to believe that, no, this is very serious. The CapEx is not slowing down. And if it's not slowing down, this entire trade that has been holding up SMH has a lot of room to run. And if it does, then that should create a lot more momentum. SK Hynix is set to guide the U.S. offering price to $149 per share, 3.1% above the Korea close. Okay, so that would imply about a $1.05 or $1.1 trillion market cap. So if you are buying SK Hynix on Friday, which I think it probably pumps just because there's going to be a lot of excitement on it. But it's going to be as volatile as Micron and SanDisk for those that trade it. Let's do the green or red poll in the chat. What do we think? We obviously are green in the pre-market. Now we got to see if this green can hold up right here as well. Pepsi did have earnings. They were relatively okay. Nothing too crazy. Let's pull this up right here on Pepsi.
Third of 1%.
What's fascinating to me is that Pepsi last year came out and said that it was going to cut prices. People had argued that they had been increasing prices way too much and people had stopped buying. What they did was actually see a decline in North American revenues as a result of what they had done, which was cut prices. They said they are going to go persist with this because they want to increase the revenue. The revenue increased more than expected, the organic revenue, about 7%. They also had an FX tailwind. This, though, is interesting. This is the consumer. I don't know if it's discretionary. Is it discretionary to get Lay's potato chips and Pepsi Cola? Either way, it really highlights how people are still buying some of these goods, even though they had pulled back a little bit earlier this year.
It's the World Cup commercial the day.
So Pepsi warned about the American consumer today on their earnings. Now, again, they did beat on the top line numbers, which is why I think the market was, excited initially, but then the stock started falling and it's down about 3% right here. But again, their cutting of prices they think are fine with on a margin level because obviously it's helping them beat revenue and they probably don't want to inflate as aggressively in a time where there's already a lot of concern around how consumers are going to be able to afford a variety of products, gas being the biggest given oil prices. But consumer discretionary in general has kind of sucked along with the retail trade. I know Elf has done well over the past couple of months, but Nike, Levi's jeans yesterday, that also did not do the best. I think it's down about 6%. Yeah, now it's down about 3%. It was down 6% yesterday. In a moment where we're seeing the greatest tech revolution of all time, does the market have the intense appetite to buy Lay's potato chips, Levi's jeans, Nike sneakers? I don't know. And if they do, it's very momentary because, when those stocks don't really do anything, the money just rotates into the stuff that's moving, which is kind of what we're seeing in the semis right now. And that is what we got. Okay, what do you think? Pepsi or Coke? What do people like more? I feel like, when I drank Coke in Singapore, it felt different than the Coke in America for some reason. Like it didn't really hit the same. It didn't taste the same, but I feel like I am more of a Coke guy versus Pepsi. I feel like Pepsi is much sweeter. But if I do have to drink a Coke with like a nice meal, then it would probably be Coke over Pepsi. The McDonald's Coke is the Coke that is the greatest Coke of all time. I don't know how they carbonate it in their machine, but I'll say that I think is what gets a lot of Americans hooked onto McDonald's Coke. Coffee. I still have not got onto the coffee wave that so many of you guys are on. I had tea a little bit in Singapore, like Indian chai, but so not got into the coffee world. Corby right there, that's up 3.2%. Oracle still flat in the pre-market as, that does have a software component to it. So the software names being down is hurting them. Oh, speaking of energy drinks and drinks in general, Celsius got an upgrade today, but they got a downgrade on their price. So they got a downgrade to 55 from Needham, but they did upgrade them to buy. And so you've got the price action that has obviously not been the best for a lot of people. Regardless of whether Celsius ultimately beats or misses quarterly expectations, we do not expect results to materially change investor sentiment. That will come from scanner data. While fundamentals have slowed more quickly than expected, we believe a significant amount of bad news is already embedded in the shares. And with a cleaner 2027 on the horizon, we find the current risk-reward setup compelling. I would agree with that. I mean, Celsius is trading basically at a 2-year low, and I know the actual low was like at $18. It's at like 30 right now, so it hasn't really moved. The Alani acquisition was what really got it to move back in March of last year. It's down 35% year to date. I mean, again, it's like, is Celsius the buy at $30, or is CoreWeave going to go to 115 before Celsius even goes to 40? I think that's the question that a lot of people struggle with, but it probably should be higher from these 2-year lows right here. What about Mexican Coke? I think I've had Mexican Coke like 2 times in my life, and yeah, the way they make that Coke, which I think is just they put more sugar in it, if I'm not wrong, is definitely an interesting taste. Oh, I did drink a lot of beer in Singapore because my uncle drinks a lot of beer. So I think I drank the most amount of beer I've ever drank in my life. I think it was like 10 or 15 beers over the course of the entire vacation. And I don't know how to drink beer. Like, I like the taste, but like, I'm not a beer guy. But I didn't want to drink alone. So I don't think I'm gonna become a beer drinker, you know. But I used to think beer was nasty. Now I'm just like, yeah, beer's it's decent, especially when it's hot outside. Cane sugar, that's correct. Cane sugar is what they put into the Mexican Coke. All right, so we got 8 minutes until this market opens. We covered some of the more important headlines around Meta and Trump kind of adjusting his concern. This was an interesting headline as well this morning. Once again, talking about drinks, coffee, all that stuff. Starbucks is reportedly using AI to build in-house software that can replace some Microsoft inventory and IBM maintenance tools. The rollout could happen by end of 2027. Starbucks is spending about $400 million a year on software and is targeting $2 billion in cost cuts. The CTO said there's clear opportunities to reduce the spend in software. This is also another reason I think the software stocks are taking a bit of a hit. Yes, Tiger beer is what I drank in Singapore. Tiger beer, and there was another one in Indonesia that's very popular, but Tiger beer was one of the big ones we drank. But when the CTO comes out and says there's a clear opportunity to reduce the spend in software based on automating different workflows, Starbucks at the end of the day is not like the biggest company in the world that's going to completely start a revolution with how companies are thinking of using software, but they are a relatively large corporation, blue chip stock. And when they come out and say, hey, there's ways that we can augment our software spend by building in-house software that is used via AI, which TLDR, that means they're going to vibe code a bunch of stuff. That's bullish for Anthropic. It's bullish for Micron. It's bullish for all the semiconductors. It's bearish for the software names. And so I don't think Starbucks is tanking the software names today. I think that's more of the Meta announcement, but I think it definitely is contributing some salt on the wounds on this idea of how much software is actually going to be relevant going into the next few years. Yes, Bintang. Wow, a lot of you guys know the Bintang was the one that we had in Indonesia, and then Tiger beer is the one that we had in Singapore. Honestly, a lot of them tasted the same. They didn't taste that different, but yeah, these were the main beers that we drank. All right, so what else do we got as we get into this market open? Oh yeah, Bank of America added Meta to the firm's US 1 list, a collection of the best investment ideas among their buy-rated US listed stocks. So you've got Bank of America making the argument that we think Meta is one of the best buys in the market right now, which I don't think is crazy for them to say. But obviously the market, doesn't really agree with that, which is why Meta has taken the hit that it's taken over the past couple of minutes at this point, not even the past couple hours. AEHR had a new deal, and that's why that stock is up. AEHR, Air Test Systems, is up 15%. They were up 20% pre-market. This is another photonics name. Again, you get a hyperscaler deal or get some type of deal that, once again, gives you a re-rating, and your stock goes up, especially as your market cap is smaller. There it is right there. AEHR receives follow-on production order from lead silicon photonics customer, which probably is a hyperscaler, to fully automated Fox XP wafer level burn-in system. The Lumentums of the world, the Coherence of the world, all those stocks are up as well. Peng had a great earnings, Penguin Solutions. This is another memory name. That's up another 3.93%. They were up 25% yesterday. This is also another small cap. As long as the memory thesis is intact, the earnings are well justified around Samsung, SK Hynix, Micron, and some of the smaller names like Peng to continue getting some love. And that's why I think that stock is also up 3%. So really, I think this market, it's kind of coming down to when you get these ugly dips on the semis, do you believe in the AI thesis? Like it's kind of black or white. You either believe in it and you have to buy those dips to really capitalize on that exposure, even though the valuations on some of those names are a bit aggressive, or you don't believe in it and you think it's a house of cards and you think eventually the valuations will compress. And again, these consolidating moments are super healthy for an AMD to go from 580 to 499 and then maybe consolidate around 550. Like that's a healthy thing for a stock that's already up 2x this year. But it also begs the question, do you believe in it when it goes down to those low 500s enough to take advantage of it? Or do you think AMD doesn't deserve to be anywhere near 500 and fair value is closer to 350? But given how they've increased their earnings and given how the sentiment has fundamentally shifted on the CPU architecture in particular, it's hard to see the re-rating of those stocks to the downside unless there is a full-on collapse of the AI narrative. And there will be these peaks and valleys, but a full-on collapse, which is what the Michael Burrys of the world are calling for, is just not happening. Speaking of Michael Burry, he bought DraftKings yesterday and Flutter. So he's going long gambling, which is interesting. But I guess long gambling is his play right here. Broadcom, it was at 407, now at 400, losing a little bit of momentum, still up 2.96%. We're going to see if this move gets faded on the semis or they actually are able to hold on to their momentum. Are the earnings sustainable? This is the multi-trillion-dollar question for all the semis. And, I think, no, the earnings are not sustainable for a lot of the semiconductor names, but the unsustainability of it is not going to become apparent for a few years. And in the meantime, it's like either you buy the names that have sustainable earnings but are getting no love from the market and you just ride the underperformance and build a position, or you buy the high beta names that are putting up massive. I don't think Dell is going to be doing the type of growth that it's doing 5 years from now, given we are at the infancy of the build out. But maybe Dell is able to diversify their business. Same thing with Micron and all the other. Maybe these companies can diversify their business enough over the next few years where they can get into other areas of growth where they don't need to be reliant on just server racks as the primary thesis for the AI build out. And I think that's why Micron talked about humanoid robotics, right? That's why they talk deeply about humanoid robotics and what that means for memory. But those are more risks as humanoids in general are still unproven, and you've got to wait until that thesis ultimately tends to play out. Micron right there. Look at that. 7% pre-market as that continues to get some love. So today might be redemption for the semis. We are going to see in the next 2 minutes as the market opens. Corning, that one's coming back. This went to 270 to 178, back up to 200. Again, many of these names presented different opportunities. Intel, that's up 4%. SoFi actually got an upgrade today, $21 from 17. I think this is from Goldman Sachs. There is a neutral rating on the stock, not a buy. So, the market or Goldman Sachs did not say you should buy the stock yet, but they did upgrade the price. And so hopefully that one starts to get some love as the rate cut narrative goes more into fruition. 77% of you are saying we will have a green day in about a minute. We are going to find out. IBM is probably down because of the software sell-off today. IBM down about 4.8% right there. It had a little bit of recovery over the past couple of days from $250 up into that $300 range. And now we just got to see back at 287 if that can hold on to its excitement. For those that are asking why software is down today, the TLDR is Meta announced plans to double their compute capacity. And essentially, oh, by the way, I didn't talk about this as well. Meta is investing $10 billion in Canada to build a new data center. You put those announcements together, it's super bullish for the semiconductor stocks. And if the semis have to go up, it tends to be that the software stocks go down. So that is why I think the software stocks are down. We'll find out if we have any more details going into the market open. But as a result of that, that's why you're seeing some of the pain in the software names and some love in the semi names. All right, here we go. Thursday, July 9th, 9:30 a.m. Thank you all for being here. The stock market is now open. All right, wake your ass up. Let's get into it. Meta opens down 4%. 4% down on Mr. Meta. Microsoft down 2%. Google down 2%. Palantir down 3.8%. Goodness gracious. Okay, so the software names and the semi names going adverse to each other. CoreWeave, that's green, up 4.3%. Nabesis, that's green, up 3%. TSM, that's green, 1.8%. NVIDIA goes red. NVIDIA was at almost 207 pre-market. NVIDIA now, 203.40, slightly red, but it is red. Robinhood at 113. CoreWeave at 94, really good momentum on the neoclouds right here. IREN, 45, that's also up 4.5%. OSS is up 1%. Adobe's down 2%. Amcor was at 63 yesterday, 72. Nice little rebound. Grabs up 0.5%. SanDisk up 5%. This was at 1,400, now 1,823. Western Digital, that's up 7%. SMR, that's up 0.5%. First Solar, that's up 2.84. Micron is up. Marvell is up. Marvell's up 6. Micron up 7. There you go. You've got some green coming back into the optics and the memory plays. CoreWeave 95. Wow. Oh, she's going for it. She is going for it. Astera Labs, that's up 6.62%. Dell's up 1%. Broadcom loses 400. Very close to kind of hovering above 400, but still up on the day on that deal with Meta. Peng Solutions, that's up 11. Penguin doing its thing. Oracle 141. Air Test Systems, that's up 14 on that new deal. CoreWeave 94.50. Micron 1,017. Where are the airlines? American, that's up 1%. Carnival, that's up 1%. Oil was up yesterday. So the fact that the airlines are up is, I think, basically the market saying we don't believe that oil is going to continue going up. And as a result, we're buying the adjacent stocks to oil. ServiceNow, 5% down. Why not? ServiceNow was pushing 115 yesterday, folks. Just a disgusting reversal. Same thing with Palantir, which was pushing 140 on Monday, and now at 126. Levi's, that's down 4%. Your Salesforces of the world are indeed down another 5.7%. KLAC, this should be up. KLAC is indeed up 7.9%. Many of these names are recovering to levels that they were at basically 2 weeks ago. Not really levels to where they were at in the middle of June. That's where they were kind of at their 52-week highs. So they still got a lot of work to do, but they are getting somewhat of recovery, which is relatively bullish for the semi names. Rocket Lab, 84.61. 84.61 on Mr. Rocket Lab. That's up 1.5%. NVIDIA, again, 203. SPY, 746. SPY is not looking that strong right here. Got an ugly red candle at the open, even though it's still green. So those pre-market gains completely wiped out. Sharon AI, that's up 3.7%. This is one of the stocks that Leopold buys or owns. And there are rumors that they're going to get a deal with Anthropic soon. So that stock up 2.4%. Robinhood, 113.50. AMD, wow. My goodness, dude. It was at $4.99 yesterday, $5.47. Full rebound. It feels like AMD really, really wants to get above that $600 level. It's obviously been teasing it multiple times over the past few weeks. HPE, that's up 3%. Pepsi is down on margins based on them not inflating their prices, which helped revenue, but didn't really help EPS growth, as that one was a miss. 135 on Pepsi. That goes down 5%. They do pay a divvy, Pepsi, 4.3% divvy, but stock right there is down 5%. SoFi trying to get back up to 18. And then Oracle, are we getting a bid? Oracle, there you go. A little bit of a bid on Oracle, 143.48. Let's see if that one can get 145 and make a bigger move right here. CoreWeave, again, that one's green. Nebius, are we at 230 yet? We're at 221. Never mind. We were almost, no, we did touch 230. We literally touched it. Touched it for a second at the market open at 9:30. Now you got a $9 candle to the downside. But we were close to getting there. Micron also, some red candles, 1,022 to 1,009. Got to see if that happens. Netflix, 74.49. Netflix, I think, is pegged to the IGV algos. And like, I think it's going to go up or down with the software names. It was up yesterday with software. It's down today with software. So I feel like Netflix is in that category. T1 Energy, that's up 0.5%. BABA, that's up 0.5%. SoFi, that is up 1%, trying to break over 18. Bloom Energy, that short report really getting dismissed by the market right there, 273. Where is Mr. Tesla? 391. What is Tesla up year to date? I feel like we haven't really talked about Tesla this much this year. Obviously, SpaceX has taken a lot of attention. Tesla's down 10% this year, which is actually outperforming a lot of the other Mag 7 that are down a bit more, but Tesla right there, 392. RXT is very confusingly down 20% because if I'm not wrong, they signed a partnership, an extended partnership with Palantir this morning. Did they dilute? Yeah, Rackspace and Palantir signed a deal to deploy Foundry and AIP for regulated sovereign and mid-market customers. So they expanded their partnership this morning. The initial partnership was a few months ago. I'm confused why they're down 20% here. There's got to be some dilution. I don't see anything other than the Palantir. Yeah, there you go. Rackspace technology files for mixed shelf size not disclosed. Okay, so they don't know. We don't know how much they're diluting by, but they are filing for a mixed shelf offering, which, I mean, the stock went from $1 to $7, so it makes sense that they're diluting, but that'll give you why the stock is down 6%. They also lowered guidance. All right, a mixed shelf offering and lower guidance. That'll do it for you, down 20%. CoreWeave trying to hold on to 93. Red candle from 95. IBM down 3.5%. Corning down from 200. Wait, did they have earnings today? Did RXT have earnings? It probably makes sense why they put out that Palantir partnership the day of earnings. I did not see their earnings. Oh, I'm seeing it right now. Private cloud revenue expected to be between 242 and 246 million. Revenue for the second quarter expected to be in the range of 641 to 649. Adjusted EBITDA 58 to 62. Okay, so lowering of guidance and the mixed shelf. That's why that stock is down. DRAM, are we red? DRAM is, no, that's up 6%. It is down from where it was a little bit ago, but it's not necessarily red yet. Penguin, that's up 8%. It was up 11%. Rocklab, 84.53. That was at 81 yesterday. Lumentum getting a nice recovery. Again, Lumentum got hit pretty hard. Over the past couple of days, it was below 700. And now it is above 770. Palantir getting smacked, down 3.9. IBM getting smacked. Where's Adobe? Adobe also, yep, getting hit 217. This was pushing 240 just a few days ago. ServiceNow down about 2.1. Rivian, I think, is interesting here. Not for any fundamental reason, but the stock was at 20. It fell to 1650. Just from a pure, like, is the market really going to take it that much lower? I feel like a lot of the bad news is priced in, and even for a trade up to like 18 or 1850 again, I feel like something could happen there, but you would imagine the majority of the bad news is priced in. Microsoft down 2%, Meta down 3.5%, Google, that continues to go down 1%. All right, so typical day that we're all used to. Semis are up, neoclouds are up. The large cap semis are down, like an NVIDIA. Broadcom holding on to some of its love. Robinhood trying to get a little bit of a V-shape right here. Robinhood, by the way, launched Robinhood Chain, which we haven't talked about too much, but it was part of their crypto announcements back in July, or back in like last week in July. That chain is going viral. It's had billions of dollars traded on it already. It's essentially a competitor to Solana. And there's a lot of excitement around what they're doing in crypto. So I think that is not necessarily priced in. Usually they make money on crypto just by people trading Bitcoin or Ethereum. I think in the next 5 years, they're going to be a full-fledged crypto financial ecosystem that is probably going to be magnitudes of revenue higher than just like people trading Bitcoin and Ethereum and paying Robinhood a transaction fee. So that is one narrative that's good for the stock, but obviously the stock has already made a massive move from the low 70s. And so we got to see how much the market is willing to get it above 120. Micron, 1,022. Palantir goes down even further. Salesforce down 3%. Corning, 197. Air Test Systems, that's up 14%. AMD continues to make a very nice move at 547. We did get jobless claims today. It came in at 217 versus 215. So jobless claims, not that big of a deal in terms of unemployment. Representative Josh McGuire, who serves on the House Armed Services Subcommittee on Cyber Innovation, has bought SpaceX. He sold BlackRock. Just got his financial disclosure. Sold BlackRock, bought SpaceX. SpaceX, again, really sitting in that 145 to 150 range. I mean, this thing had its 15 minutes of fame up to 230 and has not been able to get above 155 over the past week now. But kind of sitting here in this range as I think people are waiting for more shares to get unlocked. But you do have some of our representatives buying SpaceX here. Other update on SpaceX, they launched 1,589 Starlink satellites in the first half of the year. In 2025, they set an annual record with 3,180 Starlink launches, and they have about 11,000 satellites that are currently operational. That is part of the reason why Raymond James gave them an $800 target. Oracle, are we getting some love? Okay, we should be. The stock was $250 less than a month ago. 140s is probably a little too low given the backlog that they have. 145.83 Oracle, that's up 3.65%. SMCI, that's up 2% on the day. Akamai, that's up 2%. ANET, that's up 3%. Cloudflare, that flips green as it was red. And now 1% as well. What price did he get? They don't tell you the price they bought it at. They just tell you that they bought. Honestly, they should tell you the price they bought it at. But yeah, we just know that he did buy it in the past 45 days. Nebius, did we flip red? No, we didn't flip red. We're still up, 221. It did lose a lot of momentum at the open, so you probably got the shorts that came right in at the open. Same thing with CoreWeave, same thing with Broadcom, as that's now below 400. But look, I'll take 220 over 180 from where it was last night. There you go. Robinhood getting a little bit of a breakout, 114.58. As that continues to go green. Nvidia. I don't know why they do this every day, guys. I don't know why. It's every day they do this. Don't understand why, but every day they find a way to take her down, and we just have to deal with the reality of it. 201.87. Dude, it was pushing 207 pre-market. It was pushing 207 pre-market. Rivian up 3%. Lumentum up 10%. Meta, are people buying it up? Meta, they're trying, 577 to 588. Let's see if we can get that back up into the 600s. But that one is still getting hit. NVIDIA is likely to see much of an impact on its gross margins due to the memory prices of the company's long-term agreements with memory makers. Yeah, the memory prices affecting NVIDIA's margin has never really been the biggest concern because, NVIDIA's locked up memory supply with Micron for the coming years. It's for the other hyperscalers that don't have that type of leverage that have to pay a lot of CapEx to the memory guys, including Meta and Google. And I think that's what the market is trying to figure out. How aggressive is that going to become? Palantir right there, 127. Salesforce, as that is down 2.6%. CoreWeave, 93.43. That's up 3.5%. Micron kind of chilling out now, around 1,000. Hoodie, she's trying. Let's see if we can get the break. There you go. There's 115. She is indeed trying. It would be really nice to see if that can break 115.50. ServiceNow, also little reversal. Actually, nice reversal, 101 to 106. Okay, if we start to see semis go down, it might be because software is getting a green candle. IG flipped green. It was down 2%. Now it's not down 2%. Now it's up 0.5%. Nokia getting some love today, 12.56. That's up 5%. SMH was up 3.8. Do we have a red candle on it? We do indeed have a red candle. It's a slight red candle, but it might be a signal if software is getting ready to flip. Robinhood, 115.34. Okay. Not bad. 115.50. There's reversal right there on Hoodie. It was at 112 and then 116 on Intel. Right here. Is Nokia up because of optics? Yeah, probably. Probably Nokia, I would imagine, would be up because of optics. I mean, the biggest thing around their AI RAN product is the 50% growth that it could possibly have going into like 2029 is some of the expectations. And, that if you have Marvell spiking up, if you have Jensen saying good thing about optics, that should be a big tailwind for them. But again, the stock is up a lot this year. It's just the call flow on this is insane. People are thinking 25 by January 2027. The call options are unbelievably strong in terms of volume. So, I think that's another reason why the market's getting excited. Tesla also flipping. How about Meta almost trying to get that green run? And then Oracle, 147, 5%. AMD, wow, 550. All-time high was 584. All-time high was $584. I don't know if we get that today. We are $3 away from a $900 billion market cap as Robinhood is not slowing down, folks. We're looking at almost 116. Looking at almost 116. Do you have any thoughts on Take-Two? I do not. I know that Grand Theft Auto is coming out. Okay, so I read a report yesterday on Take-Two, actually, from the sell side. And one of the arguments they made was that Take-Two is pricing Grand Theft Auto at like $80, and that's way too cheap. Like, this should be priced at like $250, right? Like, this should be a freaking expensive game given all the hype around it. And so I wonder if there's a world where Take-Two actually raises prices. Now, they haven't signaled that they would do that, but if they did, that would be a material re-rating of the stock. Because, if it goes from 80 to like even $120 a game, that would be a lot more revenue. And they have the leverage to do that, but they haven't. So, I don't know. I wonder if they would end up doing that. A lot of you guys saying 250 is crazy, but would you pay it? Because, I mean, I think a lot of people would pay it. I think a lot of freaking people would still pay it, even if they think it's crazy. Given how, I mean, it's been, 16 years? Okay, for everyone saying no, are you a real gamer at that point? Because $250, you wouldn't play to, you waiting 16 years, you wouldn't pay $250. Now, I wouldn't pay that much because I don't really care about games. But if you're a hardcore gamer, that's crazy. Okay, all of you guys are so hype about this Grand Theft Auto thing, and now you're like, yeah, you wouldn't be willing to pay $250. Oh, I get it. $250 is expensive, but it's been 16 years. Like, is $250 really going to be the or $200? What's the bright line then? Would you pay $120, $130? They make money on the microtransactions. Yes, I'm just saying the sell side report that I was reading, I think it was from Oppenheimer. The analyst was making the argument that's like, hey, they have the leverage to raise prices, and basically the argument was like, we're confused why this thing is only $80. Now maybe 250 is too aggressive, but like, I don't know. I think that would be somewhat bullish for the narrative on Take-Two. Bloom Energy, that's losing some steam right there, 277 to 266. Netflix trying to flip green. Pepsi still down about 4.2% today. Analysts aren't gamers. That is fair. 250 would lose a bunch of casual gamers. I wonder if it would, though. Like, people have been waiting 16 years for this game. Like, is maybe not 250, but like 150, 175. Is that really, is an extra $100 going to stop people, especially all the money that people are going to make by playing the game, right? Whether it's streaming or making content or all that stuff. Like, I don't know if $80 is appropriate for that, given how much hype there is around the product. S&P 748, trying to get 750, but not fully there. That analyst is an idiot. That's the only sell side report I've read on Take-Two. And I don't know, I kind of thought it made sense. It's like, yeah, people should be paying more for this, but I'm not in the gaming world. All I just know is there's so much hype around it that I feel like they have the demand. SoFi above 18. SoFi above 18 as that continues to make a higher move. Nebius right there, 216. Wow, Nebius goes red. Huh. Robinhood also loses 115.90, now back to 115.27. Okay, I mean, if the neoclouds are going down, does that mean the software names start to catch a bid? You're not seeing the software names fully turn green yet, but if they do, AMD also getting a red candle from 551 to 546 as that continues to go red. I feel like more and more people will pay the premium to play the game. I'm surprised. There's a lot of you that are like, you would not pay a premium above even $100. Like, I wouldn't, because like, I don't really care about the game. If you've been waiting that long, I don't know. I guess that's not the culture of gaming. No video game is worth over $100. It's a game at the end of the day. I mean, if that's the sentiment, then that's fine. But the sort of public perception I see of that game is that, people have been going crazy over it. But then again, maybe it's just not worth that type of a price tag. Oracle right there, up 4.3. Oracle also getting a red candle from 148. NVIDIA, wow, 201.50 it touched. I mean, Nebius turning green isn't a really good sign, to be honest, or turning red isn't a good sign. So I would like to see if that can recover back to at least 221. Penguin still up 7.5. Micron is not losing 1,000, which is really nice. This was at 875 yesterday pre-market. It's been 16 years. I would pay $300. S-Max 987. I think you are in the minority, given the amount of people that would actually be willing to pay that much money. Intel 115, as that continues to get a little decline from that 117 level, but still up a decent chunk on the day. Do we have any other macro data today? Let's see. Oh, I think we have housing that's going to be coming up pretty soon. Let's pull that up right here. So we saw the initial jobless claims. Existing home sales we get in about 5 minutes. Streets assuming 4.17 million. Or sorry, 4.2 million. And we're going to see if we get above that. Admit the people who make the money for Take Two are the whales who pay tens of thousands of dollars of game currency. 250 is nothing to the ones who generate the margin. Yeah, I mean, that's fair because obviously there is a lot of money that's spent in the transactions in the game itself. So it begs the question, what does that mean for the price of access to be able to pay for those transactions? S&P right there, 748.50. The airlines and the cruise lines all going green. So, all right, so this Iran excursion, as Trump likes to call it, is not really... Look at that, crude goes down. Wow. We attacked them yesterday. Like Trump posted videos of us bombing IRGC bases. That was not enough to get oil to go up. And I think that's also part of the reason why the high beta names are continuing to make their move right there. Bitcoin as well, ignoring everything going on in Iran, almost 63,000, which is helping the Coinbases of the world. Coinbase right there, slightly flat on the day. AMD 552. Interesting. So even with all of Trump's comments yesterday's, even with the actual attacking at the IRGC bases, that was not enough to spike up oil significantly, and it's obviously not enough to take the market down. If anything, it just shows the resiliency of this market, man. There you go, Hood back above 116. It shows the resiliency of this market and their inability to let a multi-day decline be respected in any meaningful way. Marvell, 225 to 249 over the past 24 hours. Micron right there back above 1,023. Rocket Lab, are the space names doing okay? Rocket Lab 84, ASTS 74, that's flat. Lunar Redwire also down. Rocket Lab has held up really well. I mean, a lot of the other space names have taken a bigger beating than Rocket Lab. And even with the dilution, even with Peter Beck selling shares, the Iridium acquisition, which someone can interpret it as bearish because of the price they have to pay. Obviously, I think it's really bullish because of their ability to compete with SpaceX with the full stack for connectivity. You have a bunch of different headlines, and the stock, has not really broken below 80. And I know it's down from 150, so it's obviously down a lot, but it's kind of back in that range where it was stuck at for a few months, which means maybe it's just consolidating for the next leg up back to 100. Nebius goes green again. Wow, what a reversal on Nebius. 230 to 215, right back up to 222. As that continues to go green. Paying $200 for a game that you might spend the next 3 years of your time on is not expensive. People spend $200 at an amusement park for one day. That was kind of the tone of the Oppenheimer report. Like that was exactly the tone of what the guy was saying. It was like the level of importance of this game, which most people have literally bought Take-Two for Grand Theft Auto. Like that's the only reason they're buying the stock. He's like, that level of importance, given how much people spend money on all these leisurely activities, probably justifies a higher price than $80. But obviously, if that hurts demand, then that might not be the best thing for the launch. AMD back to 553. Meta trying for 590, but not fully there. Mid, are you buying anything today? I bought some stuff yesterday. Was planning to buy Oracle today, but we kind of already got a breakout right here. Again, already have Oracle below this price. If we get back into that 142, 143 range, it might buy again, but I think it's cheap here. In the one below 150, I think it's a deal. I just wonder, given we saw Nebius take a hit, CoreWeave take a little bit of a hit, I wonder if those two reverse again. Oracle's definitely going to go down with them. So whoever got this 5% pop, congrats, but maybe this thing gets a little bit of weakness. If not, I think Oracle would be the buy. Honestly, Oracle's a good candidate for selling puts on. Oracle, I mean, at this point, I would want to get assigned at around 135, 140 again. So might sell some puts on Oracle. Nokia right there, that's up 6%. As that continues to go green. Palantir down 4%. Where is BMNR and MicroStrategy? BMNR 1482. This thing was at 13 last week. And then MicroStrategy 96. Up 2.2. Look at Amcor. This is a good one, man. The thesis on this is very solid. It was kind of ugly to see it go from 100 to 63, but Nebius went from basically 300 to 185. I mean, like when they all fall badly, but when they come back, they're pretty ferocious on the recovery. Rivian right there, that one's also up about 4.5%. Wow, someone just bought $30 million of SanDisk calls expiring in 2 weeks. Strike is 1,900, which is very close to the money right here. But 30.5 million of premium, 129 of those calls being bought right now. Bernstein says gold will be worth $4,500 an ounce by the end of 2026. They expect the Federal Reserve to avoid aggressive rate hikes. Persistent inflation could still force higher rates and pressure gold. Wow, interesting. So gold used to be the hedge against inflation, and now Bernstein, which is saying the obvious right here, that higher rates could actually pressure gold, which you would think it would help gold. But if gold is a risk-on asset, not a risk-off asset that is antithetical to inflation going higher, then rates are bad for growth stocks, and they're also bad for gold. And seems like that's what we're seeing right here. And that's also why gold has been taking the hit that it's been taken. IWM, that is up as well. The small caps. This is another reason I think the bears kind of lose momentum when you see the smallest companies in the stock market that are the most sensitive to rate hikes, the most sensitive to economic labor or economic data, the most sensitive to interest rates. When they go higher, it kind of is the market telling you we don't think the economy is in a bad spot. I mean, IWM took one of the biggest beatings in 2022. And it took them a while to recover. It still hasn't even touched above 300. But it has been patiently waiting and coiling up. Micron, there you go. High of days, 1,033. 1,033. That is a 9% move on Micron, back to 1.2 trillion in market cap. 875 to 1,035 again. It was at 1,250 after earnings. Either this is the move that takes it back, or this is where it chills out for a little bit. But DRAM, SanDisk, Western Digital, Seagate, all of them getting that pump right here. Is Trump buying Micron? I think, wasn't it disclosed that Trump owns Micron? I think that was disclosed. He definitely we didn't talk about this because I was gone last week. He tweeted about Micron. You guys saw that tweet, right? He explicitly mentioned their stock too. So yeah, it's I mean, I think he wants them to win. He said, Micron, a great American company, announced that they are putting in $250 million into the Trump accounts for the future benefit of children, and their stock went up 9 points today. Thank you, Micron. He didn't have to say their stock went up 9 points, but I think he was kind of trying to imply, hey, look at Micron, look at their stock, look what they're doing. Maybe the stock's a good buy. I feel like that was the obvious implication. President doesn't want Micron to fail. Doesn't want AI to fail. Doesn't want the whole semiconductor trade to slow down. Again, if the semi trade collapses, the economy collapses, because the economy right now is built primarily on GDP growth from CapEx. So it's like it's kind of rigged to not fail if you believe that the administration is going to consistently support it. Palantir getting a nice little bid right there, 128.35. ServiceNow flips green. Okay, so some of the software names going green. Yeah, Goldman Sachs upgraded SoFi to 21 this morning from 17, but they still have a neutral rating on it. At the same time, NVIDIA getting smacked. Interesting. Oracle up. Wow, Hood. Almost 117 here. She's going for it. CoreWeave trying to get back up to 94. Broadcom getting hit. So Broadcom, NVIDIA, wouldn't surprise me if TSM is going down. TSM is indeed going down. They're still all green, but the large cap semis rotating into the small cap semis as Robinhood hits 117 and the software names try to catch a readout. I don't think the implication of that tweet was to say you should buy Micron. I think it was saying, hey, other companies, look, you should put your money into these Trump accounts. Your stock will go up. Yeah, that's fair. It wasn't an explicit like a ticker symbol PLTR type of moment that Trump had. I just think him referencing the stock so explicitly is, same thing we did with Dell, same thing you do with Palantir, obviously. It's one of those things where usually a president doesn't do that. And the fact that Trump is doing that is he's trying to support these companies. And he obviously is trading these companies. I do think there's some truth to when Trump says, I don't know like what my financial planners are trading. Like, I don't think his financial planners are calling him and saying, hey, sir, should we buy this stock? Like, I don't think that's happening. I also think like every call that the president does in the White House is recorded. It's all logged. Like, it would be really hard to kind of hide that stuff. But I think his advisors are close to people that are close to Trump. And they can talk to those people and they can get a gist of, where policy is tending to go, which is why Trump sold the rip in February and he bought the dip in March. I mean, he perfectly sold before the dump, before the Iran war, and then bought the lows. And that's where I think, obviously, his financial advisors have, they're not explicitly telling him what they're doing because that's legal, but they definitely have a sense of knowing where to go based on his policies. And as a result, Trump's been benefiting from that. Broadcom 394, 1.6. Meta, did we get the run? Okay, 596. Not bad. Meta trying to make a move for it right here. As Sandus also trying to make a move for 1900. When your advisor is Barron Trump, I don't think it matters. That's fair. Your advisor is Barron Trump, it might not matter. Oh, housing data. Let's see if we got that right here. Okay, existing home sales. Do we have a beat? I think we are close to that. Let's see. Looking for about 4.2 million in houses sold.
From May to a seasonally adjusted annualized rate of 4.09 million units, according to the realtors. That's a miss. The street was looking for a slight gain. Sales, however, were 2.8% higher than June of last year. Now, month to month, sales were down everywhere except in the Northeast. This count represents closed sales, so contracts that were likely signed in May when the average rate on the 30-year fix was still moving higher. You remember it came off its February low due to the Iran war. Now, inventory at the end of June was 1.56 million units, down 0.6% from May, but up 1.3% from the year before. That's a 4.6-month supply. 6 months is considered a balanced market between buyer and seller, and that kept pressure on the prices. The median in June was $440,600, up 1.8% from the year before, and that is the highest home price on record. 1/4 of all sales were all cash, down from 29% last year. First-time buyers made up 33% sales, up from 30% a year ago. And the Realtors' chief economist, Laura Thun, said the seesaw in sales that we've been seeing lately shows how sensitive buyers are in changes to mortgage rates, although they're still bumping very high right now. Back to you guys.
Kind of in a tight range last couple of weeks.
Okay, so that's your housing data. Nothing too crazy. Housing stocks not really moving on that. It was a very slight miss from what the market expected. But the reason Meta is pushing 600, folks, wow. Zuckerberg tweeted for the first time. Oh my goodness. Zuckerberg tweeted for the first time since 2023 to put out this news. That's how you know this is a big deal. Today, we're releasing Muse Spark 1.1. A strong agentic encoding model at a very low price. It's available through our new Meta Model API and in Meta AI. Muse Spark 1.1 is the strongest at agentic performance tool use and computer use. It does well on long-running tasks and 1 million token context window, can delegate execution to sub-agents running in parallel, and is trained to use computer interfaces on desktop, mobile, or browser. The Meta Model API allows developers to build Muse Spark for the first time. Our focus is on delivering strong agentic and multimodal models at a very low cost, and more to come soon. first tweet since July 5th, 2023, and realistically the first tweet since 2009, because he's only tweeted 3 times before that tweet in 2023. I think Zucks came on Elon's platform after Elon released Grok 4.5 yesterday, literally to say, hey, there's a new guy in town when it comes to coding models, and it's Meta Muse Spark 1.1. Now, is this going to be A, better than Codex, Grok 4.5, and Claude Code? That's the question. And then B, is it going to be cheaper? And if it's not as good, is it good enough to justify a cheaper cost? And if it is as good and it's cheaper, could Meta make a serious argument to enterprises that are paying what they're paying to Anthropic and Codex or to the open source models and say, hey, we've got something new for you guys? I mean, maybe there's an argument for that, but that theoretically could be what the street wants to see in terms of their CapEx spend actually being justified on some of the stuff that they're building. Sam Altman is live. Let's see what Mr. Altman has to say.
54% more token efficient on agentic coding tasks, and also, as good or better as the other best models out there. And we're really seeing people now start to care about efficiency, understand their spend, get a great ROI. So this is a great step forward for us.
So that 54% number, that's news. How much is that coming from your focus on bringing down costs for your partners, for your customers?
Entirely. Cost and speed. It's also much faster. But customers clearly, every enterprise now is thinking about spend and the value they're getting in exchange for AI. And this is what we really want to do. Like, we want to be the best, most dependable, most reliable, best ROI partner for enterprises.
Here in Sun Valley, you're meeting with a lot of your partners. I'm sure most of the companies here are your customers. What kind of pressure on spending are you hearing from them, and how are you hearing they plan to adjust their budgeting around AI spend?
Well, they really like our focus there. This is the first year where AI spend has been a big topic, and all of a sudden it's a very big topic. Everyone's asking what we can do to help reduce spend or increase value, and I think our models are well suited for that. So this release of 5.6 Sol, I think, is a very welcome release.
So your 5.6 went through this government approval process, was delayed by a couple of weeks. What happened in that government approval process?
I thought it was a very productive process. We had a very good time working with Secretary Lutnick, Secretary Besant, Director Karen Cross. This is our first time through it. So there are things we will learn about how to make it better for the next one, which will get going on soon. And I think it'll be a much smoother process. But the government's technical capability was impressive to me. People really are doing good work testing and red teaming these models. And they really care about getting these models out quickly, but with a high level of safety. And I think this is actually in everyone's interest. If you want broad access, which we do, and you have powerful models, you really want to be able to be confident in your safety claims, because otherwise the world is going to get uncomfortable very fast.
So did you have to make changes? Did you implement new safeguards as a result of this?
So they would test and find things, and we would say, okay, great, that's a problem. We'll address it this way. Or we would say, this is actually, we think, a good behavior to have. So it was a collaborative back and forth, but we made many changes through the process.
So OpenAI said just a couple of weeks ago that it's working with the Trump administration to try to establish a system, what you called a repeatable process for future model releases. How is that going? And do you think you and your rivals are going to have delays in terms of when you can roll out your models in the future?
Look, I think AI is going to be great. I think there's been too much talk about all of the negativity, and most of it has not quite come true in the way that our industry has said it would.
But you mean in terms of job losses, or?
There has been very little job loss that I can see so far, despite predictions that 50% of the jobs were going to go away or whatever. But I also mean in terms of all of the negative impacts that using the technology could have. It's been better than a lot of people feared so far. Doesn't mean we don't have a lot of work to do in the future. I think part of the reason, though, is that the industry has done hard work to align the models and to build safeguards around these systems. And for a new technology that's been adopted so fast and so deeply, it's gone better than a lot of people thought. Not perfectly, of course, but part of that is this focus on making these models safe and still useful. So having another partner in that, the government now, that's also going to be testing models and looking for problems, I think that is good as long as the process is understandable, fair, quick. And the government seems to really share those goals. And my guess is our next time through it with our next model, it'll be a much smoother, we understand it and know how to go with it better.
As you work to bring down costs for your customers, how does the rising cost of compute and memory impact your budgets and your planning going forward?
It's definitely a headwind. There's no way around that. It means we have to be even smarter and deliver.
NVIDIA loses 200. I'm not sure why. It's not taking all the semis down with it yet, but Broadcom, it's definitely taking it down. Broadcom's about to flip red. NVIDIA here below 200.
Deliver more algorithmic gains to combat the upward infrastructure costs and still have a declining price to the customer.
There's been reporting that Chinese models are catching up to models released by U.S. Frontier Labs. With your launch today, what's your response to those concerns about the rise of China?
The Chinese open source models are getting very good. I think that's fine. But I also think we will continue to have the best models in the world, and people really want the best models in the world.
Microsoft recently announced that it's pulling back from using AI, OpenAI. Microsoft is obviously a big investor in your company, but as they pull back from OpenAI and Anthropic to focus more on their own models, does that pose a threat to your business?
I predict Microsoft will remain one of our biggest customers.
And you had some news that's interesting for consumers this yesterday, and you introduced a new voice model.
Yeah.
How do you think that will impact your consumer-oriented business as well as your enterprise business?
So look, it's easy to get most excited about 5.6 Soul, and as I think we all are, it's this incredible model. But we forget, it's easy to lose how much there is to gain in all of these other modalities. Voice is increasingly how I interact with AI. And I didn't think that was going to be the case. I've always been like a typer or a texter. But the voice model is now so good that I'd kind of rather talk to it as long as I'm, not in a room with other people. And I find that it's faster. I find that I have like a kind of different thinking process around it. I originally thought this was largely going to be a consumer feature, and that, consumers really wanted to like talk to their AI like sci-fi from the movies. But I'm now pretty convinced this will be a huge enterprise thing too. Watching the way people at OpenAI have been using Codex and how they just talk to it. They might talk for like 30 minutes and try to think through some ideas, and then Codex will go implement it. This seems like it's going to be an important part.
Do you think this will drive consumers to pay?
Yes.
Now, I have to ask some questions about the reports last week that you proposed that the U.S. government take a 5% stake in OpenAI. It's part of a push to establish a broader regulatory framework. What can you tell us about that?
A lot of inaccuracies there, but I probably shouldn't get into it.
Okay, so if you can't get into that, tell us about your outlook on the regulatory framework now and your proposal, not just for an approval process that we talked about before for launching new models, but for a larger US-led standards body for AI.
Again, the people want this technology. This is clearly something that businesses, consumers really want to use. They want it to be safe. When you get on an airplane, you don't want to like have to go think about, oh, is this airplane going to crash? Have they done all the right safety work? You just want to assume that it's safe. And with AI, the impacts of using a model can have an impact on the whole world. And so citizens of the world also want to know that something irresponsible is not going to happen. There will be a balancing act. We'll have to leave enough space for people to use these tools the way they want. And we certainly don't want to be the, we don't want to like impose our moral worldview on everybody. But I think it's important that people can rely on these models being safe enough at the power level they're getting to that they don't have to constantly think about it. So I think for broad adoption, getting well understood safety, at the level of when you get on an airplane, it's not going to crash. I think that's important. And go ahead.
Oh, no, but just thinking more broadly about even what the suggestion of the government taking a stake in the company might mean about your approach, what does that say about the way you're thinking about your relationship with the government and with regulatory bodies beyond that?
I think there's no connection between any potential, OpenAI equity or other companies' equity in a sort of sovereign wealth fund and the right regulatory approach. I think completely separate. But I hope that the regulatory approach will be global. Everybody will get access. It's not like the US is going to disproportionately benefit here. I hope that it will be like quick and fair and does not get in the way of smaller companies. It would be easy to overreact here. So I hope it's light. And I hope it means that people can use AI without having to like think about safety.
I have to ask about an IPO, about your IPO plans before we close out here. Just yesterday, SpaceX closed at its lowest price since going public. How does that performance shape your outlook about your timing for your IPO?
We're not a space company.
Are you going to be going public this year?
I don't know.
Okay, well, we will be watching very closely. Sam Altman, thanks so much for joining us here in Sun Valley. We'll let you get back down to the conference.
Thank you.
Thanks so much. Guys, back over to you.
All right, that is Mr. Sam Altman. We are not a space company was his response to going public, and he would not confirm or deny if they were thinking of going public this year. NVIDIA, 10:15 a.m. It's your regularly scheduled programming. In life, death, taxes, and NVIDIA going down 40 minutes after the market open is what is guaranteed. 199.37 right here. I don't even know why this is going down. 207 to 199 is weird on a day where Meta says they're going to spend a lot more on compute when they just introduced a brand new model, which is, I'm sure, going to be running on a ton of NVIDIA GPUs and definitely going to be procuring more Vera Rubin GPUs to continue training that model. I mean, I don't know. I don't know why this one's down, but it's taken down Marvell. AMD is holding up. It's down $5 from the high, nothing too crazy. Intel holding up as well. Rivian having a great day. That's up 5%. Lumentum having a very nice day, up 11%. DRAM still holding up. Micron not really losing that much steam, still up 7%. It's Jane Street. It probably is Jane Street. But it's almost every day at this point. It's usually around, it's not even at 10:30. It's usually about 20 minutes before 10:30 where you start to see NVIDIA kind of just, I mean, imagine how many people bought it in the pre-market at 204, 203, thinking the breakout was happening, and then boom. Like, I mean, as soon as the market opened, it went red. It kind of fooled you in the pre-market at 207, and then 203 was the open, and now we're, below 200. Do we have a headline on any of this? Iranian foreign minister holds separate phone calls with Omani and Turkish counterparts. Turkish foreign minister discussed latest developments and ceasefire with Iranian counterpart in a phone call. Iranian foreign minister stressed the need to use diplomatic channels to prevent escalation. That's a bullish headline. That's them negotiating with Middle Eastern allies to not have further escalation. That shouldn't be a reason why markets take a hit, right? Is Meta using Cerebras? I don't think they are. I could be wrong, though. Cerebras back above the IPO price, but still well below that 385 pop that it had a month ago. 189.21. They do have a very large deal with OpenAI, obviously. That's what's helped them go public. The Qs, someone just bought 6 million of puts on the Qs. Or 6 million of put premium just flowed into the Qs right now. So you're starting to see that result in a red candle right here, 716.86 on the Qs. How's NVIDIA only up 3% year to date? It is a little bit of a mystery, but also it's not a mystery, right? It's a big company. It's a horrible excuse, but that's the excuse. Wow, Palantir loses 126. Goodness, dude. This is a weird price action because you'd think NVIDIA going down would take down the semis and then the software names would go up. But now the software names are kind of diverging and the semis are also kind of getting hit, like Nebius going red again, 215. Yeah, it felt like a little bit of a bull trap. But in certain parts of the market, I mean, Oracle, 148 to 144. Goodness, dude. You buy 147, 148 on the uptrend, and then you just got smacked right back down to 144. And let's see if this actually loses 144, because if it does, you're in the low 140s. Robinhood hit 117.30. It's barely holding above 150. Look at this candle. Just all at once loses 115. It's been the story of the year, though, right? Every day. This is why we're all going to end up going crazy. After this whole AI bull run is done, we're all going to end up being crazy. Hopefully we're crazy and rich, but the shit we have to go through every day, looking at this stuff up and down, it's got to drive us crazy, right? Granted, We don't need to do this. We could just buy the stocks and wake up in 5 years. So we kind of put ourselves through the torture of dealing with this. Broadcom about to flip red after hitting 4.10 this morning. But for some reason, we love to do this. It feels like manipulation. Yeah, I mean, we could blame it on manipulation, but at the end of the day, if it's manipulation, it's been manipulation for the past 4 months because the intraday trends. Micron now $9 away from losing 1,000. Now, granted, in 40 minutes, if this reverses, will anyone be surprised? Probably not. It's just the magnitude of some of these names going red is kind of interesting right here. NVIDIA, 199.15 now. Parswell says, it's already driven me crazy. I spend 16 hours a day researching stocks. Yeah, I feel like once you get infected with it, that's it. It's over. Oracle loses 144. Yucky. Yucky stuff here. On no news. That's correct. On no news. If anything, the meta news on the model is bullish. The meta data center compute news in the morning is bullish. Everything Sam Altman said is not bearish. Microsoft will remain one of our biggest customers. Smoother process of working with the government on AI. He compliments Chinese open source models, but says that frontier models will still be good. It's not like he said something that their newest model is 54% more token efficient on agentic coding. None of that stuff is bearish, I would say, for the broader AI trade. Wow, they're really going to take Palantir down today. They're really taking her down, 124.91. NVIDIA, 15 cents from losing 199. 5 cents now. Let's see if she can hold on to it. Or if we're going much lower here. Why do people cry about manipulation when prices go down? It's also manipulation when they go up. That's also true. But when it goes up, we make money. So there's no reason to cry. So, you know, that's the difference. Meta right there, 591. 591. Oh, by the way, speaking of Palantir, Iliano did put out the new tennis shorts today. So maybe buy the dip, but also buy the tennis skirt. Tennis skirt, tennis shorts, tennis polo, sweat towel, white performance cap. And new patches. I'll link it right here if anyone wants to check it out. Ugly dip we're seeing right here. But it happens. And it usually tends to happen after a really good day. I met someone at the, I think Justin at the meetup, who had almost every single piece of gear that Palantir has put out, including the chore coat, which was pretty incredible. Is that their new growth initiative? There's the link right there. Look, Palantir doesn't have any problems with growth because they're growing like crazy. And again, Karp said they're going to 3x the free cash flow in 2 years. But this market is not willing to just give it the premium and hold that premium. Granted, we were almost below 100 2 weeks ago, so I am very happy we're not at those levels anymore. That was getting kind of scary. I mean, we were really testing the waters there. Volume had declined. We had lost every single moving average. It was like, okay, are we doing it? Are we going below 100? And it fought back. Karp went on CNBC, really changed the narrative. Now we got to see if we can hold it. Wow, Nebius 213.94 from 228 in the pre-market. Zeta, is that getting a little bit of a bid? Zeta 21.91. That one's holding on. But these other names definitely going down. Nvidia not losing 198 or 199. It touched 198.97 for a second. Maybe this is the reversal. There's your 1023 potential bottom. You're seeing a lot of these other names. Nebius get a green candle. Hood get a green candle. Oracle got a green candle. Micron, Meta, Broadcom flips green after being red. Maybe this is their little flip. Where's BlackBerry? This was $13 a week ago, 11.27. That one also flipping 2 minutes ago. Every day, it is back and forth as we navigate these headlines. Again, the fact that oil's down today, I also think is just incredibly bullish, given where the aggression and the escalation of the war has gone. The Palo Alto Network CEO is on right here, speaking around demand for AI. Let's see what he's saying.
That's a good place to be in the next 12 months, and I expect by the next year we need it to be about 1/10.
Got it. Okay, so token prices still need to move down further. Your thoughts, though, that if large language models continue to get more robust and powerful in terms of AI capabilities, how does open source models really win the race?
Well, I think it's important to think, if you step back and think about it, I think the demand for AI consumption is still infinite. We do not have enough compute in the world to satisfy the demands of both the consumer side and the enterprise side. So demand is not a constraint. The question becomes, how quickly can we adopt the demand? I think the conversation will shift over the next 6 to 12 months on not how smart the model is, how intelligent the model is, how quickly can we deploy the models, how can we take context, memory, how can we take tribal knowledge and embed that in the enterprise context so we can all see value from this leaps and bounds that models are showing. I think there's going to be different horses for different courses. You will find that frontier AI models are extremely useful for groundbreaking research. Do I want an open source model doing drug discovery or curing cancer? No, I want the smartest brain on the planet, which will come in the form of frontier LLMs, which are going to solve these hard problems, and we need them. I think there are going to be task-specific models, which will be low cost, easy, they will not require sort of multi-agent orchestration, will not require a lot of context and memory, which you will get, literally as a commodity, whether it comes from open source or perhaps an older version of a frontier LLM.
All right, so sort of a customized approach of open and closed source models. Altman also said that Chinese open source models are getting good. I think that's fine. I also think that we will have the best models. Is that convincing enough? Do you think the U.S. can maintain its lead over China?
I think we've got to stop sort of balkanizing the models. At the end of the day, you have really smart models in the frontier, and I don't think it's going to be whether the next frontier model comes from the US or China or some other country. We will have really amazing models, and these models will keep getting better as they evolve. I think we will have sort of literally an array of models from really good to task-specific. As you heard about his multimodal comment earlier, there'll be models that are very good at voice, there'll be models that are very good at video. You will find that over time, enterprise will have to start orchestrating amongst these models and saying, which model is right for the task that I need you to do. So you're beginning to see in the market these orchestration layers develop, where these orchestration layers are trying to hold on to context, to memory, and to the tribal knowledge so that you can create fungibility between models. I think that's the next evolution we're going to see in the next 6 to 12 months, where things like that will make it easier for enterprises to deploy these models and choose which model are needed for what task.
Nikesh, it's David. I know you've also said in the past you feel as though the consumer is being subsidized by the enterprise when it comes to token economics. I'm curious as to how you see that playing out over time.
Well, if you think about it, David, as I said, the demand for AI is infinite. I don't know how many times I interact with them sort of AI chatbot in a day. I probably, a lot more than I was 6 to 12 months ago. Who's paying for it? I'm not. And those models are not advertising to me. So as a concept, all this compute that is being used by consumers around the world, when we tout 2 billion or 3 billion people using all this AI capability, whether it's embedded in our social media applications, whether it's embedded in our sort of efficiency applications of Workday, these, workforce applications, or we're using them for deploying OpenClaw across all of our different things we do. All this stuff is free. It's not yet paid for any monetization model from the consumer side. I think the last estimate I saw, 70% of the consumption today on AI is happening in the consumer space. Only 30% is happening in enterprise, and 2/3 of that is happening in coding. So effectively, the coding applications are effectively having to subsidize the compute if you believe that we'll keep spending between $750 to $1 trillion a year in terms of building more compute. That money has to come from somewhere.
Speaking of money, Nikesh, just take you back a bit. I mean, I remember when you were a very senior executive.
Again, as a CEO of a company that's very important in cybersecurity, when he's saying that money has to come from somewhere, he's implying that not only the demand for AI consumption is infinite, but the foundational demand for what allows that consumption to happen, aka CapEx, is theoretically also infinite if the demand is infinite. I mean, eventually it won't actually be infinite, but I think that's his argument for why, the trade will continue. Palo Alto up 80% year to date. Nikesh bought 10 million worth of his stock in the low 200s back in March. So he definitely put his money where his mouth is, or where his mouth was, and bet on cybersecurity being a frontier part of AI.
You see it, SoftBank, an allocator of capital. I just wonder, from your perspective right now, with the CapEx budgets that we're seeing from the hyperscalers, with the raises of capital that we're seeing from the likes of companies such as Alphabet or SpaceX or Amazon the other day in the bond market, how do you view this in terms of the overall return on invested capital that we're going to actually see from this investment, the likes of which we've never seen?
I think it's important to understand, if you go back historically, we have seen this movie before, whether it was people funding Uber until it sort of bridged the gap and got to profitability over time, whether it's any startup you see, raising tens of billions of dollars over time, where you have to bridge the sort of no negative cash flow period till it gets to the other side and you start seeing huge monetization. I mean, I worked at Google in 2004. We didn't know that you would be able to monetize YouTube at all. YouTube was a gas sink. You'd have to build tons and tons of compute to make sure that you could deliver live streaming video at low latency to every consumer in the world. There was no monetization model. But today, I suspect YouTube is a close to $1 trillion business. And that is the hope of technology, that if we get the technology right, if we can spend our way through that sort of trough, we get to the other side and there's huge profit to be made. And I think you're seeing that in the market. And the question becomes, which ones of these models, which ones of these efforts are going to survive through that trough and who can fund it? There are some large hyperscaler companies which have tremendous amount of free cash flow, which I suspect will have the capacity to last the distance and be able to fund it. And then depends on how the financial markets look at how the frontier LLM companies are doing in terms of the amount of funding they need. And at some point in time, they'll have to perhaps temper their enthusiasm on CapEx if the market doesn't support it, or perhaps the market will support and that'll allow for that infinite demand to be satisfied by constant deployment of compute. I also believe at some point in time, some scaling laws have to kick in from the compute perspective. It's never to the right and upwards, whether it's memory pricing or chip pricing. You'll find that there are new people trying to innovate and saying, listen, if I have to pay so much for memory, I can go and innovate, build new technology that makes memory cheaper. I can innovate that makes inference chips cheaper. So I suspect our CapEx budgets are going to decline over time from technology efficiency. I suspect that some people will say, this is too expensive. I can't be in this game. I can't play this game anymore. So I think the market will rationalize. But it's important to understand the demand continues to be infinite. And as long as you have an infinite demand curve that you're facing, I think all these things will rationalize over time.
Yeah, it's certainly a high stakes race. Price, cost, certainly a big part of it.
I think it's not something we haven't heard before, but if the demand continues to be as sensational as it is for AI, NVIDIA trying to get right back up to 200, then the CapEx continues and the trade likely continues as well. Robinhood trying to make that push again for 116, 115.45. Oracle 143.90 test back up to 145.60. Then you got Broadcom right here, 387 to 392, but down from 407. It is not my uncle. Nikesh is not my uncle, outside of popular opinion. He is not indeed my uncle. Amcor right there, 72.23. MicroStrategy, 94.50. Also, Marathon acquired some land today to build more data centers on, 13.73. So that's up 14%. As that one, along with CleanSpark, have started to get a bit more re-rated. Nate, would you be my uncle? Well, I am getting older. So technically, I am Unc. Zeta, nice little 22 breakout right there, 22.17. As Cerebrus recaptures 190. Dell was interesting yesterday. Dell fell 5% after going up 5%, then closed up 1%. Now it's right back up 5%. So this stock has definitely been a bit volatile, but they got a big upgrade yesterday from Evercore that put a $500 target on them. And I think I read the analyst report yesterday in the market open, and he said the same thing. The analyst was like, hey, demand continues to be very, very, very strong, which is why we're upgrading Dell, and we think their server rack business will only continue to grow. Western Digital, along with Seagate, all of those getting some love right here. Down from 601, but still up 7% on the day. Wow. CFTC is going to be blocking a plan from the CME to offer 24/7 oil futures trading. That's interesting because the CFTC has been really liberal with prediction markets and all these other different types of assets. I wonder why they'd be blocking 24/7 oil futures. Now, granted, maybe there's going to be too much volatility in the price of oil if they do that, but you got a headline right there. Does anyone trade oil futures? Put in the chat. If you trade, the real exposure I got to learning about the oil markets this year has been because of this Iran conflict. I mean, the past couple of years, I haven't really kept up with oil or understood oil or kind of understood the nature of it as a commodity play. But obviously, when oil goes up to the highest prices in 4 years, it kind of forces you to learn more about it. But it is a massive market with oil futures trading. Gold, silver. Where is gold and silver? They were down 3% yesterday. Gold is up 1. Silver is actually up 3.2. Frozen orange juice futures only. Where are egg futures at? Egg prices are... Oh, they're down. I mean, a dozen eggs cost $3.30 back in July 2025. They're now 32 cents. Which is actually up 8% today, but it's 87% lower than what it was a year ago. This was one of the big issues when Trump got into office around eggs. How are soybeans doing? That's a good point. How are soybeans doing? Soybean futures are down 1% today, which caused a lot of pain back up. Big Egg was colluding. Oh my gosh. Big eggs, baby. Big eggs were the issue. Open Door. Okay, so the housing prices or the housing sales were relatively decent today. That's probably helping Open Door, up 11.9. I think Zillow and Lennar could be the sleeper plays. Obviously, Open Door is probably going to pump if we really get mortgage rates to come down. Zillow's up 1.3%, and then Lennar is also up about 1% right here. What else do we got? Reuters with a report. Oil is down because the market sees the Hormuz risk as contained for now. A U.S. official said the escalation could last a day or two. Even so, officials think they have more room to escalate without triggering an immediate price shock. The key reason is that hundreds of oil tankers have still been able to exit the Gulf through Hormuz in recent weeks, which has reduced fear of an instant supply disruption. That actually makes sense. I mean, if there's plenty of traffic still flowing through the Strait of Hormuz, then you probably wouldn't need to be that afraid of, I guess, the fears that oil is going to be so dramatic in terms of, supply going down. Which is why crude right there is at 73. Open Door again, still up 11% right here. NVIDIA is back below 200 again. It is what it is, folks. We all thought buying a stock trading at 15 times forward with 94% growth was going to do well this year. Yeah, that was not in the cards. Not at least for the first 7 months of the year. Not for NVIDIA. Bsop says, how's your day trading going? Would you ever discuss some of your strategies? It's been going well. I don't talk about it too much because obviously I do not think I am by any means an expert when it comes to trading in general. I will say, me and my uncle cleared house when we were in Singapore. We legit cleared house because usually I trade at around 11:30 after the show, and during the market open in Singapore, which was like 9 p.m., 9:30 p.m. at night for us, I got to trade the market open. And I mean, and my uncle has never day traded before. He doesn't trade. He obviously trades, but he doesn't scalp, robbing it back above 116. And so I taught him some very basic strategies, VWAP, 9/5 EMAs, looking at, exponential moving averages in the context of VWAP retests and confirmations, fair value gaps, like really basic elementary stuff when it comes to technical analysis, like stuff that this is the stuff you have to understand as you get into it if you're even going to think of trading. And we did decent, bro. We did like 4,500 a day for about four days. So we each cleared like almost 18 grand. And it was crazy. We were like, one day it was Rocket Lab with that Iridium acquisition. We were just going in and out of Rocket Lab. The other day was Meta with the Meta Compute. We were going in and out. It was actually a funny story about Meta. I got to tell the story about Meta. The other day was Marvell. For some reason, Marvell was just pumping between 297 and 303. So we were just taking it long and short every day. And then the other day it was CoreWeave, which produced the majority of games. I think CoreWeave was going from like 93 to like 97. And so it was fun. I understand why people trade the open now. Like, honestly, trading the one thing I realized with trading the open was like, holy crap, I have volume. Like at 11:30, there's no freaking volume. And so you can take a trade and you think you might have the right setup, but if you don't have the volume, you might just be stuck in it for a while. And the idea of, actually making some serious money is tough because you're waiting so long for the market to catch up with you. And then the only other time momentum really happens is from 3 to 4 which is called power hour. But from 3 to 4, it's a coin toss. Like you just don't know which direction the market's going to go. But from 9:30 to 10:30, the amount of, now I get why people trade the open. They have the volume there to support the price direction where they think a stock is going. And so, yeah, it was fun. It was really fun, and definitely paid for the trip 2 times over. But it was okay. The story here is that so we were trading Meta, and we had already made like $2 grand off Meta. We rode Meta from like 605 to 615, and then Meta came back down to 607. This is before it popped to 625. So me and my uncle were sitting together. We're looking at these trades, and my sister walks into the room, and she walks into the room, and she has a little bit of a bump on her head because we were in this fancy resort, and she thought a glass mirror was like something she could walk, or it was a wall. She thought a glass wall was like not a glass wall, and she could just walk through it. And she thought she was Harry Potter in the first movie. Then she could just go through a brick wall, and she went through it, and she got a little bit of a like the smallest bump on her head, like the tiniest of bumps, right? Nothing crazy. We didn't have to go to the hospital or anything like that. The tiniest of bumps. So she walks upstairs. She walks into the room, and she's like, "Guys, I need some help." And then me and my uncle go up to her, and we're like, "What's going on?" And then she describes the situation, and again, it's the tiniest of bumps. It's like not that big of a deal. Like it's like, she's going to be fine. And so we look at each other because we're in this meta trade. And when you're day trading, you have to monitor the freaking chart. You have to look at the chart. You have to get ready to get out of the position. If it goes against you, you have to be able to exit. And so we look at each other, and we just subliminally both agree that we probably should care about this little bump that my sister has to deal with over our trading. And so, we deal with her, and then we come back and the trade is over. And we didn't lose any money, but because we didn't get the exact entry, because Meta, again, fell from 615 to 606. So we're like, all right, we're going to run this back from 606 back up to at least 611. Then Meta's at 620 by the time we come back in like literally 10 minutes. And, we missed out on like another $7,000 trade. So we ended up joking with her throughout the entire trip that she cost us $7,000. But it was so funny because for a second we were for the faintest second, I know me and my uncle wanted to tell my sister, "Hey, can you give us a minute?" But we knew that's probably not the right thing to do. She just bumped her head. She's probably a little worried that she's in a different country. She's concerned. But it was the smallest bump you could imagine. And so I think for the slightest second, me and my uncle were thinking of telling her, "Hey, can you give us a minute?" But we didn't, because we're good, we're good family members. And so we dealt with her stupid bump, but it cost us some money. But anyway, Meta was great to trade that day. So Meta, Marvell, Rocket Lab, and CoreWeave made us some money last week. Is this options? This is all equity. This is all equity. I do not think I'm even close to smart enough to figure out how to trade options. Even trading equity is challenging, dude. There's a lot of learning lessons that I've uncovered over the past couple months. I started this around May, and it's a journey. So, but yeah, right now it's just all equity, not options. Zeta right there, up 2.4% as that continues to go green. Was she freaking out about it? Oh, trust me, she had some conversations with ChatGPT about that bump, dude. It was like, again, it was a really small bump. Like it was like if you actually looked at, unless you like really stared at her forehead, you wouldn't be able to see it. So nothing happened. She just put some ice on it, and we didn't have to go to the doctors or anything. And now the bump is fine. But she was like, "Am I going to get a concussion? Do I have to go to the hospital? All this stuff." My sister tends to be a little bit more, what's the word? A little bit more. There's a specific word I'm looking for. It's not concerned, but there's like a word for people that get a little, when it comes to medical stuff, there's this word for people that get a little obsessed with every little thing. She tends to be more on that side of the spectrum. And so in my heart, I knew that I needed to pay attention to it because she's probably concerned right now. Not dramatic. Dramatic's more of a negative tone. I don't want to paint it as a negative tone because, that's just how some people are when they have to deal with the medical thing. Hypochondriac. That is the word. That is the word I wish I could have figured out that word myself because it would have sounded like such a amazing word. Yes, there you go. Hypochondriac is someone who experiences persistent excessive anxiety about having a serious or life-threatening illness. My sister absolutely is a hypochondriac. 1000% she is. And she'll tell you that herself. It is what it is. Hypochondriac is worse than dramatic. Okay, well then, but hypochondriac is the medical term. It's the intellectual way of saying dramatic. That's the word I was looking for. But for a second, me and my uncle looked at each other and said, "Hey, this meta trade, it touched resistance. It's right back at support. It's probably going to go right back up to resistance. There's a lot of money we could make, but this bump is something we've got to care about more." So yeah, that's what we were doing. By the way, this is my setup. Let me show you guys right here. I moved my large screen computer into the studio. So take a look at this. Let me take a picture of it right here. I have a multi-set view now on TradingView, and it helps. So this is what I'm looking at while I'm looking at Webull. It really helps, dude. It really helps, especially when you're looking at key levels, resistance, all this stuff. As I'm talking through price action, like being able to more appropriately see and read the charts is 49 inches. It's just cool. This is the entire setup. I'm going to show you guys right here. This is it. This is the entire setup that we're working with. I need to get better lights. I need bigger lights in the background. But we got the iPad, we got the Mac, we got the other Mac, and then we have the 49 inch. I do not like dark mode on TradingView, dude. I don't like it. I've tried it. I don't know how you guys trade on dark mode or look at charts on dark mode. I hate it. I know Jason uses it. I really like the light mode. I like dark mode on Webull, but I don't enjoy it with TradingView. Wong is so upset. I don't know. I tried using it. It's just weird looking at charts in dark mode. I kind of wanted to. One thing I've done as well on the charts on TradingView is, this was a tip I found from somewhere. I changed the colors of the candles to all black. So instead of red and green, they're all black. And it actually kind of helps when you're not only trading, but just looking at a chart, because when you see red candles, it creates a little bit of fear in you, because it's like, oh, the market's going down. And when you have green candles, you get a little bit euphoric, because like, oh, everything's going up. And so when they're all black and you just switch the color on the candles, it's just about price movement. It's not about the emotions of bright green or bright red. So I actually think that's a decent tactic when you're actively trading about it. Can you tell us about the basics of day trading? Guys, I just don't feel comfortable enough to do it yet. It's been 2 months. It's been less than 2 months. It's like early May. I think I need at least till the end of the year to even feel comfortable to speak on trade. Now, Jason, which is why we have a lot of experts join the show. Jason, right? Jason has actively talked about day trading and option strategies and TA and all that stuff. And maybe we'll do a segment with Jason next Tuesday, Technical Tuesday, where, because he's given me a bunch of tips on day trading. Maybe we'll let him talk about it. But I still think I need at least another 5 to 6 months of doing it to feel more confident. Like option selling, it was easy to talk about because option selling is easy. Like it's like selling a put and selling a call is not that hard. You can figure it out pretty quickly. But day trading requires like a fundamental understanding of price action, charts, psychology, like all that shit is not as easy to explain and definitely not as easy to execute on. So I think it just takes more time. But we'll have Jason talk about it next week because he's given me a bunch of tips as well to think about it. Yeah, liquidity, demand zones, supply zones, understanding, why the market can sweep a low and then just surge higher and what it means for stop orders and buy stops to be stuck in certain parts of the market, like outside of all the macro news and the geopolitical news that can affect a stock. Like there are so many layers to this stuff. And it's exciting to me because it's like a new hobby for me to try to master. But it definitely is a lot to grasp onto. Nabby is 216 as that starts to flip green. As we see this at least get up from being red. Day trading is the last thing you learn as an investor. If it's the first, then you probably have to eat massive losses, keep going. 100%. I mean, realistically, I don't think anyone who's just getting into investing should even think of trading. And Jason has said this over and over again. But if you've been doing it for a while and you want to take different types of risk and you want to allocate capital to different types of strategies, I think everyone starts off as like, all right, long-term investing, compounding. Then you might dabble into options. You might dabble into swing trading. You might look at day trade. You might look at all these different derivatives of the stock market, credit spreads, all this stuff. But at its core, most people start off with, hey, can I learn how to fundamentally analyze a company? Can I learn how to do fundamental analysis in the context of macro? Because I do think to trade these markets or to even invest in these markets, you need to have an understanding of macro, not just how good the company is. Like, Robinhood at 150, given the macro environment we were at 5 months ago or 8 months ago, was not a good buy. Robinhood at 70, given that macro environment, excluding the fundamentals, was a good buy. Right. So like having an understanding of macro, interest rates, the Fed, where things are going, I think it's taken me the past 3 years to even confidently being able to speak and analyze the comments of the FOMC minutes, which yesterday, by the way, were super bullish because they didn't say hike, they didn't say cut. And because of that, I think the market started to move forward. But I feel like it takes years to understand fundamental analysis, which I'm definitely not the best at yet. Understand macro analysis, which informs fundamental analysis, and then you get into price action and movements, which is key to having understanding of trading more. However, I was shocked that on the poll 2 weeks ago, I think it was about 35% of you said you full-time trade, which is now why I understand why Technical Tuesday is such a hit for so many people. So there are a decent amount of you that trade. You guys probably use the market open to help get some news while you're trading. And it makes sense as more and more people have different ways to play the market. S&P 500 right there, 747.40, as that's up 0.25%. Yeah, many people internationally are trading in the night versus trading in the day. 90% of people lose money day trading. 100%. That is true. I am not going to sit up here and advocate that you will be successful day trading because the odds are stacked against you. Like I already know the odds are stacked against me. It's not, you win by buying good companies and letting them compound. You lose pretty easily by trying to trade because you're fighting against Jane Street and algos and the market and all that stuff. So you might be saying, Amit, why are you starting to do it? Well, I've been looking at charts for 5 years. I've been inundated in financial markets for 5 years. Every little thing that happens across the entire market, I ingest that information. So for me, I guess my edge is A, my willingness to learn, but B, I'm just so ingested in financial markets that it does help me look at a chart, see news, see catalysts, and take some trades. And, so far it's been relatively successful. Had my fair share of losses as well, but that's part of the reason I'm trying it. But yeah, it's not easy to do it, which is why option selling, I think like 80% of people can win in option selling as long as you're okay with understanding the risks associated with selling a put and selling a call. I think that number is significantly lower when it comes to intraday trading, scalping, swing trading, et cetera, because it just requires a fundamentally different skill of where price action is going to go. Honestly, trading is just fun. That's also true. I mean, it's definitely fun. it is definitely fun because it's making money, right? Like making money is fun. And you think about it, like let's say you buy 1,000 shares of a stock at $20 and it goes up to $21 in the same day, or it goes up to $20.50 and you sell those 1,000 shares. You just made $500. Take away the 30% for short-term income taxes. If you're in Singapore, you have no capital gains taxes. But the point is, it takes a lot of hours of work to make $500 or $1,000, So I think many people are desensitized to the fact that when you're trading and you can make that amount of money in what could be milliseconds, it's a very compelling idea. Obviously, there's a lot of work to be able to do that consistently. You can consistently make money at your job because you're getting a paycheck. Whereas to consistently be profitable and not take a $500 loss the day after you took a $500 profit, which is what happens to most traders, is much harder. But obviously, it's also very, very compelling. So it goes both ways. All right, do we have any other macro updates? Iranian foreign minister discusses latest regional developments with Pakistani army chief. Iranian foreign minister has considered Washington's admission of not adhering to the memorandum of understanding as evidence of the continuation of its belligerent policies. The Iranian foreign minister reiterates Iran's right to defend itself against any future adventurism by the U.S. military in call with Pakistani's army chief. Okay, so not necessarily any progress on, I guess, de-escalation, but maybe not the most substantial amount of escalation that I think people expected over the past couple of days. I think it would not be surprising for Trump to come out and basically just say, we've talked to Saudi Arabia and Qatar, and we've come up with some agreements to be able to mitigate what's happening in Iran. Marathon, wow, up 18%. Talk about a stock that has momentum as NVIDIA gets back above 200. But I do think Iran has to retaliate for what happened yesterday with the IRGC bases, and that might result in a bit more escalation before this thing chills out. TA is easy. The psychology is the hard part. This is something that Jason says all the time. Like when you're in a trade, you might have an idea if it's going up or down, but the psychology associated with holding it, selling it, and taking a loss quickly, not taking a loss because you have the right setup and just being patient, that's all a game of psychology. And that's also, a lot harder as well. Amit, if you're in Singapore as an American citizen, do you not have to pay taxes? I think you have to be a Singaporean citizen. Like you have to have an address in Singapore. You have to live in Singapore. If you're an American citizen, I don't think it matters, but it's where you live, right? Taxes are based on your jurisdiction of location. From my understanding, I'm not an attorney when it comes to taxes, but yeah, I think if you're an American citizen, but you live in Singapore, no capital gains, or Dubai, no capital gains. But in America, we have plenty of that. Same psychology can be said for our long-term holds. That is correct. Google, when it was at 150, you had to really be patient that Sundar was not going to mess up this opportunity. I think Meta is testing investors right now, just like Google did last year. And a lot of that psychology still applies. As Meta tries to, I think this would be hitting 600 for the first time today. No, second time. If we can crack 600. If you're an American citizen, you have to pay taxes in America too. American citizens are taxed on global income. Really? Wow. I did not know that. Well, that is why I'm not a tax attorney. Good, dude, I thought if you're an American and you move to another country and you live there, then you're under the rule of those countries. Let's ask Gemini real quick. Let's ask Gemini. I am an American citizen. If I move to Singapore and invest in stocks, do I have to pay capital gains in America still? Holy crap. Yes, as a US citizen, you are taxed on your worldwide income regardless of where you live. Oh my goodness. I did not know this. If you move to Singapore and invest in stocks, you are still legally required to report your capital gains to the IRS and pay US taxes on them. Yo, that is crazy. Did everyone know that? Am I the only one who didn't know this shit? The U.S. tax capital gains are based on your income bracket. In Singapore, this local tax exemption does not excuse you from your U.S. tax obligations. I swear on my life, I did not know this. Dude, I thought if you move, if you're not living in America and using American infrastructure, why are you paying American taxes? 100,000 is exempted. You have to declare global income, same in Canada. I swear I did not know this, dude. I thought if you leave and go to a different country, that is incredible, dude. Well, Puerto Rico's still in the United States. So Puerto Rico, they still have capital gains tax. It's just significantly less than they don't have any income tax, but significantly less than the other states in America. But I thought if you leave the country, that's it. That is crazy, bro. I think it's only if you don't have citizenship in the other country. Let me ask Gemini. What if I become a citizen in Singapore? That's wild. I really didn't know that. Becoming a Singapore citizen only exempts you from U.S. capital gains if you formally renounce your U.S. citizenship. Damn. That freedom ain't free. You got to give up those gun rights if you want to stop paying capital gains tax globally. That's crazy, bro. Genuinely, I did not know that. Apparently, all of you guys knew that. I did not know that. That's incredible. Wow. Well, I guess that's how it works. Goodness, that is surprising to me. I didn't know there was a global tax on American citizens, no matter where we go. Robinhood back to 116, Palantir back to 126. Yeah, dude, that's why death and taxes. That is literally the two things that are guaranteed in life. You cannot escape it. Cannot escape it. It's 11 a.m. Markets are relatively flat. Nebius goes red. SoFi, wow, what a move. I don't even know the headline on this one. I know there was a Goldman Sachs upgrade today, but 1838 up 3.65%. As that one continues to go green. Marvell, that's up 6%. NVIDIA 201. Google 350. Google is at 361 yesterday. That one's down. And then Meta. There you go. Meta back above 602. Meta back above 602. Let's get to Stacy from Bernstein. See what he is saying about semis here. I was going to have Jose on today, but he said he can't make it. He didn't tell me why, but we're gonna mess around with him next week when he's on. I am 100% sure he's on vacation, and I just don't think he wants to tell me he's on vacation because he knows I'm gonna mess with him. But it's Thursday. He was supposed to be on today. He said I can't make it. I think he's on vacation.
You on Micron's big investment. Your thoughts on the trickle down effect it could have on the sector?
Oh, I mean, look, memory capacity in particular is very, very tight right now. We need a lot of it, and the fact that they're building, I think, would be great. They're all adding, right? I mean, you know, we've seen memory prices explode to the upside. We're seeing, I mean, these guys are all driving a 90% gross margin, something that it's something that we haven't ever seen before. AI demand is just exploding. It's driving tons of demand for everything that they're making, and they need to add capacity. They're building the clean rooms, and then they'll be building out that manufacturing capacity over the next several years. And look, I'm happy to see Micron building it in the U.S., building it elsewhere. Like at this point, I don't really care. Like we need everything that they can bring to the market right now, probably. Yeah, and clearly it benefits. You know, you mentioned a number of the semi-cap players, Applied Materials and the like. I mean, clearly, you know, to build out that capacity, they need the tools. And frankly, everything we're seeing in AI right now. Personally, I think it sort of translates to more chips, more wafers, more tools, and semi-cap clearly has caught a pretty big bid on that theme over the last year to date as investors start to look for this capacity to come online.
Yeah, the AI ecosystem is growing. You have memory players like Micron putting more money to work, but so are the hyperscalers. Meta now designing its own AI chip. How much competition could this new chip introduce to the likes of NVIDIA?
Well, so we've known that this is coming from Meta. In fact, as I cover Broadcom, for example, they're working with Broadcom in these chips, and Broadcom's talking about multiple generations with Meta, and they're going to start ramping Meta. I mean, even Broadcom said in a pretty big way into next year and beyond. So I'm actually happy finally to see the chips announced. That's always a good first step. But it should be coming, and it should be material. I mean, even Broadcom's talked about not just Meta, but they talked about $100 billion plus in AI revenues just for themselves next year on the back of these types of custom chips and other things. In terms of competition, I mean, yes, there's competition in the sense that NVIDIA had the entire pie, and other players are going from something to nothing, and some of them could get reasonably sizable. But you have to remember, the pie is getting bigger as well, and getting massively bigger. And I've probably said this on the show before, but my own opinion is I don't really worry so much about competition, who's winning or losing right now. This is semiconductors. There's always competition. It's imperative on you to try to stay ahead of everybody else. But at the end of the day, the question really should be, is it still big or is it not? I think if it's still big, everybody can thrive. If it's not, like, everybody's in a lot of trouble. You can look at the numbers, though. I mean, NVIDIA will probably do $500 billion in data center revenue next year. Broadcom said they'll do, $1 billion plus. AMD might do 40 plus. Or even Qualcomm said they'll do 5. Right? Everybody's doing fine. Like, everybody's like growing a ton. And I think if you were to calculate the percentage market shares, I'm not even convinced that they're moving all that much. Like, everybody right now is pretty much selling everything that they can make. As AI, gets bigger and bigger and bigger and kind of drags everything along with it.
If we're riding this wave of intense innovation, then Stacy, where are we on the discussion about depreciation schedules for the hyperscalers and some of the neo clouds?
Yeah, this was like the Michael Burry bear case, and
it's exactly the post I was just reading.
Sure, I didn't know there was another post. I mean, fine. Yeah, I mean, there was this view that, like, oh my God, they're using 5-year depreciation, and oh crap, they disintegrate after 3 years, which is not true. And we've done some work on this. You can look at, for example, the rental prices of GPUs that are 5 years older or even more, and the rental prices are still very, very healthy. Demand is very, very strong. I mean, some of these guys, they've got like 5-year contracts that are rolling off, and they're re-signing those contracts at even higher rates than they were on before. Again, I think this is a function of demand. Right? Demand is so strong right now that they need every bit of compute capacity that is available. And even those older products are getting fully utilized, and they still work, and they can clearly still be deployed and monetized at attractive levels. Again, I think if the demand were to roll off to the point where we don't need that older capacity, then we would have problems, but we have bigger problems in that scenario anyways. I am not worried about GPU depreciation right now at all.
Are you at least eyeballing the debt market's willingness to finance some of this stuff?
Yeah. I mean, this is, I think, a legitimate debate, right? And the debate is, the hyperscalers have probably reached the limit of what their cash flow can support. I mean, these guys have a lot of cash flow, and it's kind of gone away, right? So now they are having to do other things for more creative financing. They're tapping the debt markets. We're seeing equity raise and that sort of thing. And people do get a little concerned. I would say at this point, I think there's probably still a lot more capacity to absorb in terms of like debt and equity, but it is something that we didn't have to worry about over the last several years. We're reaching a new phase of investment because of the scale of those investments that we're seeing. And so it comes back to the same thing. Like the legitimate debate, I think, is on returns. What's the ROI? If there is an ROI, and by the way, I still think that there's clear evidence of ROI that is building. It's still early, but I think it's still building. If there was an ROI, I mean, I don't know there's any limit that we're hitting anytime soon on this. If it turns out that there's no return, then we have a big problem. But I don't actually think that's the case. I think there's, like I said, you can look at the rental prices. You can look at cloud acceleration. You can look at
SPY almost 750. SanDisk up a nice 9% right here. If this is our little pump before 11:30, it looks like the market's going for it. Meta is well above 600. So Robinhood almost back to 117. We are trying right here to get back to those 945 highs.
Like Anthropic, whose revenues have gone vertical. and they've got a product that people are willing to pay for example. So I think there's plenty of elements or evidence that the players that are deploying this stuff actually are seeing a return.
Yeah, so you're clearly very confident, Stacy, about this upcycle continuing. Have you spent time looking at Terafab, the opportunity for SpaceX and its ability to get a chip to market?
Yeah, we have. It's funny, when he first coined the term Terafab, the whole point was we want to deploy a terawatt of compute here, which is a tremendous amount. I did a piece on this a while back. A terawatt of compute would probably require more semiconductor manufacturing capacity than currently exists on the face of the planet. And would probably cost trillions of dollars to deploy. So I'm not holding my breath for that. However, if you look at SpaceX and you look at where I think they want to drive this, they clearly need a lot of semiconductors, a tremendous amount of semis. And either he's going to have to build it himself or somebody else will have to build it for him. And so I think it's still early, but I think those engagements are real, right? And like it'll start small. You'll presumably, you'll build a pilot fab and you'll work on it. But I mean, if he's going to hit like some of the numbers that they're looking for toward the end of the decade, they need a lot of semiconductors. Somebody's got to build those semis. And it looks like he's showing a pretty strong appetite to try to do it himself.
Yeah, they've got a big center that's coming up in Grimes County, Texas. So we'll be watching that one closely. Stacy, always good to get your thoughts on.
So once again, same argument that Nikesh made. Demand is infinite, and we don't have enough of the compute to supply that demand. Meta right there, 603. It is 2 cents away from flipping green. Nvidia, after tagging 198 back to 201. SanDisk, I don't know the news on SanDisk, but it's completely outperformed the other memory names. I think part of the reason potentially is just because it fell so bad compared to the other memory names last night. And maybe that is your reason. You have your Marvells of the world that's really trying to break above 250. It's been kind of oscillating between 245 and 247. Broadcom, although it was much higher in the pre-market, it is starting to get a rebound down from 391 to 396. And AMD has been a winner today at 554, really not losing a lot of steam. Yeah, ASML as well. Dude, ASML has been just great. It was kind of stuck in 2024, but once it got the breakout, once Elon also expressed how much lithography is going to matter for the Terafab, which is part of what he just said is going to require just an unbelievable amount of compute. I think that also put ASML on the map and got them to be a lot more excited. Here's a new chart out by Bloomberg. The top 10 U.S. stocks now account for 43% of the S&P 500's market cap. The percentage has been at or above 40% over the past 12 months. Over the last 10 years, the top 10 weighting of the S&P has more than doubled. At the same time, the proportion of the 250 smallest companies has halved to 7%. So those top 10 companies, if I'm not wrong, are NVIDIA, Apple, Google, Microsoft, Amazon, TSMC, Broadcom, Micron, Tesla, and Meta. I believe those are your 10 companies that take up the majority of this. It is lopsided like it has been all year, but we are starting to see a bit more of the broadening out. This is the heat map for today. A lot more green in the high beta parts of the sector. Once again, it's hilarious when the semis go up that, again, the hyperscalers, the consumer discretionaries, defensives, and software all go down together. Home improvement's actually been getting a little bit of run, Home Depot, Lowe's, etc. I think on that idea that rates could be coming down. But yesterday was the opposite. The rest were green as the semis were red, and it really just goes back and forth. Qualcomm getting a bid right here, 195. There she goes. I did buy this at 186 last week. This is the first buy I've ever made on Qualcomm. I think Jason's thesis is very solid on it. I also think the investor day was, I think it was pretty bullish compared to the price to earnings you're paying on Qualcomm versus the growth. I mean, what was his name? Zuckerberg and Nadella, within the first 20 minutes of that investor day, made an appearance explaining why they would be acquiring more Qualcomm chips. And so, like, they're obviously incentivized for Qualcomm to do well, but Qualcomm is getting a lot of the big players in the game. The real big pitch for Qualcomm, and this is the part that I'm not the most excited about, is their evolution of chips, not just in the data center, but in these new AI on-prem devices like glasses or necklaces or pendants or all that stuff. I don't believe in that stuff. I don't think it's going to, be a massive Game changer. By the way, speaking of glasses, Meta's working on even new versions of their glasses, but that is potentially what could get the market more excited about them if they get a further re-rating. So Meta is reportedly working on super sensing smart glasses that could continuously record audio and take photos every few seconds. Users could then ask Meta AI questions based on what the glasses captured. Meta is reportedly considering a setup where raw audio and images are not directly stored or shown to users, but metadata is uploaded for AI queries. The recording LED may stay off during super sensing mode since Meta currently reserves the indicator for active photo or video capture. I don't know if that is the world that people want to get into when it comes to glasses, but if it is, then that's going to be a new reality for AI hardware. And we're going to have to see how much people actually care about that. Broadcom getting a nice big move right there, 395 to 397. This was at 407 in the pre-market. Maybe this one gets right back to that $400 level. I want the Meta glasses without the cameras. I don't think people are going to be comfortable knowing that if you're in a restaurant and they see someone wearing those Meta glasses, that theoretically they could be getting recorded. I just don't think as a society people are comfortable with that. And again, I also don't think the use case is that good. It's like, okay, you're recording and you can ask your glasses some questions. Like, I feel like you could just do that on your phone. I'm just not a big proponent of seeing that broader vision. But Meta's still going for it, and you're going to need chips to supply those products, and that's where Qualcomm could potentially play a role as well. Amit, yes, your AI needs to know what is going on around the world about you, much like FSD is always running 8 cameras. Yes, but my difference in opinion there is FSD has 8 cameras to help you drive, which is a real use case. Meta having cameras in their glasses to tell you about a historical monument you're looking at, that's not compelling to me. I don't know if that's enough of a use case to get billions of people to wear those glasses. But yes, you obviously need the cameras in the glasses. You need a lot of advanced edge AI to make that a reality, just like FSD does. But FSD's use case is like, way more relevant to my opinion. I thought the Apple Watch was stupid, but look how it sold. Yeah, but I feel like there's a difference between an Apple Watch, which has been a consumer product for hundreds of years, a watch, and just, adding a touchscreen to it and making it sync with your iPhone and all that stuff versus wearing glasses on your face. I feel like there's a divergence, between those two. Maybe I'm overthinking it, but I don't think they're exactly the same. What earnings are you the most excited about? All right, put in the chat. What earnings are you the most excited about? We got the financials with next week with their earnings. Let me show you guys the calendar. So next week, it is going to be all financials, JP Morgan, Goldman Sachs, Bank of America, etc. The week after that, it gets crazy. You got Tesla and the Googs on Wednesday. You got Intel on Thursday. IBKR, Capital One, Charles Schwab on Tuesday the 21st. And then the week after that is really the Super Bowl. Wow, Microsoft, Meta, and Hood, same day, and Grab, same day. Microsoft, Meta, Hood, Grab, Qualcomm, and ARM on the same day as well, along with FICO, eBay, Carvana. Okay, so Wednesday the 29th is going to be crazy. Tuesday the 20th. When is SoFi? SoFi's the same day as Hood, early in the morning. See a lot of people here saying SoFi and AMD. Thursday, we have Apple, Amazon, Coinbase, Reddit, Rivian, Cloudflare, Roku together. Okay, so Apple, Amazon on Thursday, Microsoft, Meta on Wednesday, Hood and Coinbase, Hood Wednesday, Coinbase Thursday. And then you have all the other software companies on those same days. All right, so Wednesday the 29th, which is also the FOMC meeting, and Thursday the 30th are going to be crazy. When's Netflix? Shouldn't Netflix be before everybody? I don't see it on this chart. Netflix. I think Netflix actually going to do well in earnings just because I think so much of the bad news is baked in. July 16th. Okay, so that's next week. So next week we've got Netflix as well. Intel is interesting because last time they were at 60 and none of the good news was really baked in, even though the stock had already 2x'd. This time, I mean, a lot of the good news you could argue is baked in. So I wonder, is that enough to be excited for it? Or, does that mean that Is Intel just going to 150? Like, are the earnings still going to be that much better? AMD is not next week, but the week after next week. So AMD is going to be on July. Oh no, it is the week after. So it is going to be on August 4th. It's going to be with SMCI, ANET, Open Door, Snapchat, Zeta, Upstart, Toast, etc. That's when AMD. Same thing with AMD, right? A lot of the bad news was not priced in. There's only upside on the last earnings. I mean, theoretically, only upside, right? And now, could one argue so much of it is priced in that there's only downside? I mean, Lisa Su and Lip-Bu Tang are really going to have to just put up some strong numbers to kind of go against that narrative. Amcor right there, 72.65, up 9% here on the day. The glasses have a use case on solo travel trips. Yeah, that's fair. I think there are use cases for it. I just don't think they're use cases that fundamentally replace people's day-to-day life with the phone or the watch. And that's why I'm just not as bullish on it. But look, even if Zucks doesn't sell billions of glasses, even if Apple doesn't sell billions of glasses, they sell tens of millions or even hundreds of millions. You're going to have demand from all the semiconductor companies that are helping them to build those products. So it still is net bullish. Apple, speaking of Apple with those glasses, 314 as that continues to go green. I think Josh Brown yesterday made the case for Apple to 400. And, the argument was kind of rooted in this idea of agentic Siri and where that's going.
What they're guessing will be the price of memory will still be the price of memory. And we don't know whether or not new supply.
4x. And then
I like to see the way these stocks, not the stocks, let's not anthropomorphize the ticker symbol. I like to see the way the buyers respond to bad news and how quickly they come in and with what volition they say, I don't think so. And that is exactly what you can see on this chart. Notably, did not violate the 200-day moving average on that pullback at all. And now you're seeing, I think, a stock where people ran out of reasons to sell it. And just the rapidity with which the buyers came in to accumulate is extremely notable. I'm showing you 5-year price here. Just to paint the picture, this is an uptrend that started at the end of 2022, like a lot of the uptrends in technology stocks. But this is the only one that looks this good versus the rest of the Mag 7 stocks.
Could you leave this on for a sec? Yeah, the chart looks good now. This has been a really tough ride.
Yes.
Look at 2022. We all know that was every stock, right? Opened at the highs of the year, closed at the lows of the year. I mean, literally 2022.
The 52-week ranges, the highs and lows within each 52-week period on a rolling basis, extremely treacherous.
And then 2023 was a great year because it opened at the lows, closed really well. 24 was pretty good, but look how tough 25 was. I mean, I know it wasn't the only stock that looked like that during Liberation Day.
I've been pounding the table on this stock since the year began as the one that's really going to show us something this year. And it doesn't seem that brave now, but in the 200s, the talk about Apple was they missed AI, they misfired on the product launch, and basically they're screwed.
They weren't growing. I was definitely not bullish on Apple. They hadn't grown their top line in 4 years
because they hadn't had a product cycle until the phone came out last year, and the phone was a hit, and that should have changed everyone's minds, but not yet. Not everyone has changed their minds yet. Let's put up earnings.
And the phone is a hit. I mean, I upgraded to the newest phone. It's really good, really fast. It's been years since people have upgraded Apple. They're 314. Apple was at 317 before the WWDC event. Touched 270 and now right back up to 314. They did miss AI, agreed, but they also missed spending this crazy amount of CapEx, which is now being punished by the markets, not really being rewarded. So it's funny because it's like if Apple had potentially seen AI years ago and maybe invested in their own foundation model, who knows, what they would have been able to do with consumer devices that had a real model. But I also don't think Apple, you really needed, again, OpenAI and Anthropic have spent hundreds of billions of dollars to build the models that we have today. Was Apple actually, Apple doesn't even release a product until they see that the market has significant demand for the concept of the product, like foldable phones. I mean, they're years late on foldable phones, but they're trying to do it the right way, so they take their time. I don't know if they would have spent all that money on CapEx, especially when the market didn't really know what CapEx was. Like if Apple had figured out AI early 2022 and started spending on training models and buying GPUs, they would have been burning through their free cash flow, and they probably would have got punished at that time. They would have been rewarded today. But, Apple's a Berkshire stock. Like for Tim Cook to have to address a shareholder base that doesn't really like excessive spending, it would have been tough for them. So I feel like there never even would have been a chance for them to embrace AI the way that a startup like OpenAI was able to embrace. Still don't know if that foldable phone is going to be a hit, but it will be a new product, and a new product is, I think what people are waiting for. The Vision Pro definitely was a dud, but they tried, right? Like at the end of the day, you have to try. And in 2023, it seemed kind of exciting. It was like going viral for a week. It just didn't end up really taking off. But I think they're going to come back with something similar to it eventually. Okay, I think that is pretty much it for us here on the open. I don't think we have anything else too crazy to look at. Let's get this quick update from SK Hynix, which will be listing tomorrow, I believe. The pricing is about $149. Let me know in the chat if anyone's thinking of buying this one, but it will be another name in the memory space, and we're going to see how the market can digest it.
Selling nearly 178 million ADRs. So those are American Depository Receipts. 10 of these US ADRs represent one South Korean share. So SK Hynix, for example, closed about 5% higher and sold just after 2 to 3 days of selling. And I just confirmed moments ago that the US listing is set to price at $149 a share tomorrow. Barclays expects that U.S. premium to settle anywhere between 10 and 15% higher than what we're seeing in South Korea. So why would anyone pay more for the same company? Scarcity is the answer. SK Hynix is the purest bet on HBM. That's the high bandwidth memory chips powering NVIDIA's AI chips, with roughly 56% of that market. Micron is a competitor. Yes, it's diversified across other memory schemes like DRAM and NAND. Samsung, another competitor, is a massive conglomerate with chips, smartphones, fabs, and much more. But for U.S. investors, this is the first clean way into the world's dominant high bandwidth memory supplier. Normally, hedge funds would arbitrage that premium away, buy the cheap Korean shares, short the expensive ADRs here in the US, wait for the prices to converge, but it's not so simple here. A company spokesperson tells me converting those US ADRs into Korean shares, quote, can be executed freely, but going the other way, quote, requires a separate reporting procedure. That means time and paperwork, friction that works against the arbitrage. TSMC's ADR has a similar structure and is traded at a double-digit premium for decades. Tomorrow at 10 a.m. Eastern Time, I'll be speaking with the chairman of SK Group, first on CNBC. We're going to ask about that premium, new fab spending, and essentially just where does memory go from here, especially when so many investors are already in these shares. So watch where the ADRs open and where they settle over the next few days, business days. If the premium holds, it tells you U.S. investors will pay up for pure AI memory exposure, even after this brutal week, with the exception of today, for all of these chip stocks, guys.
I was going to say, I mean, going into the SpaceX offer, there was a lot of discussion, KP, of selling things so you could buy that. I mean, today is not a day where we're asking that question.
Right, but today is one blip in been over a week and a half of selling. So the consensus seems to be that the selling that has happened over the last week and a half, yes, there are fears about Meta spending. Yes, there are fears that maybe we've hit a peak, but it's also a source of funding for SK Hynix. That is a big test tomorrow. How could we find $29 billion of cash to buy these shares in the market? Is it just going to be net new cash, or are we taking that money from elsewhere? And we can argue that maybe it's coming from some of the chips.
Yeah, or maybe some of the old economy names that are not faring well in the early days of earnings season. Yeah, thanks, Christina. Christina Partsinevelos. Still to come this morning, Rockefeller.
All right. That's going to be an interesting one. I would imagine it's going to get a pump. There should be a decent amount of excitement here for this name, SK Hynix, but I feel like the algos will absolutely position it with the SanDisk, Micron, Western Digitals, and Seagates of the world. Can you buy options on ADR? Yes. I don't think the option will be live tomorrow. There's plenty of stocks with ADRs like Baba that you can do options on. But we will most likely see a 2x or 3x triple leverage SK Hynix I'd say what, in like less than a week? I would give it less than a few weeks before. I mean, we got the SpaceX 2X ETF the day after the IPO. So I'm not buying it. No, I'm not buying it. I mean, maybe I buy it as a trade, but buying it as a long-term investment, I mean, there's plenty of American memory companies you can buy if you're trying to like go long. Trading, it's a different question. There's probably going to be a lot of hype around it that day. Just like SpaceX, it was fun to trade, you know, the day it went public, the week it went public, but you know, for the people actually wanting to hold it, that's a different question on if you want to have it as a long-term bet. All right, folks, that is it for me. We are done for the market open today. I will be back on the market close. Chris cannot make it today because he is traveling, so we will not be able to do Macro Thursday with him. But we'll still get through all the different headlines and stuff that we got. Let's get through word of the day. We're 2 in a row as we are back this week. It's kind of crazy that it's already Thursday, dude. It felt like it was Monday yesterday. So the fact that we have 1 day left this week is wild. But yeah, first week. Happy to be back. By the way, I missed June's birthday when I was in Singapore. So happy belated to June. I believe I missed her birthday. I think it was like last Tuesday. Might have been Wednesday when I was out. So happy birthday to June. She has been watching the channel for 4 years now. Big part of the community. And hopefully you enjoyed your... June, I think... Was your birthday the day that Rocket Lab acquired Iridium? Because if that was your birthday, that must have been a hell of a present for you when you woke up and saw that price action. Word of the day. What is this, dude? Scenic Deutsch? Scenic Deutsch? A figure of speech in which a part represents the whole or the whole represents a part. When a headline says Wall Street is optimistic, Wall Street is a Scenic Deutsch for the financial industry and its participants. There's no way in hell anyone has seen this word ever in their life. Like if anyone says in the chat, Amit, how could you not know that word? You are lying through your teeth. Absolutely, there's no way anyone's heard of this word. How do we say this?
Synecdoche.
Yeah, fuck that, dude. Fuck that. That is ridiculous. Synecdoche? I mean, I wasn't that off with Scenic Deutsch, but it's a little off.
Synecdoche.
Synecdoche. Talk about an intellectually sounding word. Just bust out that word in a conversation. Well, the synecdoche of how I'm thinking about the nature of existence. I mean, dude, philosophical. The pronunciation is right beside it. I don't look at how they tell you how to pronounce it. I just look at the word itself and try to pronounce it on the first try. Because if I try to pronounce it the way they try to tell me how to pronounce it, it's cheating. Because, you know, I want to be able to say the word myself. But I thought it was like, I thought the latter part of the word was Deutsch because of Deutsche Bank. It kind of looks similar. I know there's not a U, but like the D-O-C-H-E kind of looked, so that's why. But whatever. How do you say this thing again?
Synecdoche.
Synecdoche. Okay. That is what we got. Thank you, everybody, for being here. We'll be back on the market close in a few hours. Again, hopefully the routine is back and running for everybody. I know it's back and running for me. Excited to be back. Hopefully everyone has been enjoying it the past few days. I mean, we do have a bit of reversal across the entire market. I know some names are still kind of stuck, but overall these dips, you know, they are getting bought more than not. Steve uses this word all the time. There is no way on planet Earth Steve uses the word synecdoche all the time. There's no way. Michelle says use it in a sentence. I'm going to have to think deeply about this word in the future to make sure I use it in a sentence. All right. That is it. Thank you, everybody. Appreciate you all. I'll be back on the market close. All right, everybody. Have a good one.